Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Welcome everyone. Happy Monday. Good morning. Thanks everyone for joining. It's almost 6 a.m. Eastern, so we're going to have a full 4-hour session going to 10. And we're going to get started in just a couple minutes. So I hope you guys are all ready. Make sure you guys got some coffee. And we'll be getting ready to get started.
Hey guys, good morning. Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey, welcome everyone. Good morning. Thanks everyone for joining. Happy Monday. Happy December. Happy start of the week. Welcome everyone. It is almost 6 a.m. Eastern in a couple minutes. Today's date is Monday, December 1st. So it's the first of the month. Normally on Mondays, we do take it easy. It's the start of the week. But also, you have the start of a new month. So following technicals, if you're looking at like a higher time frame, you'll see a new monthly candle is going to print starting today. So just please be careful. Trading always on the first day of the week, first day of the month. It could be a little volatile once they get things situated. So just trade careful with proper risk management and navigate accordingly, okay? We're going to do a 4-hour session here from 6 a.m. till 10 a.m. and we're walking into 10 a.m. US high impact ISM manufacturing PMI news. We'll stick around for like an additional 5-10 minutes just to see that news. But hopefully we're done trading by that time. You never know. Maybe we're in a trade going into that news. But the plan is to be out of a trade when they release that news. But we'll see how everything goes. Okay, so that's at 10 a.m. And don't forget later tonight at 8 p.m., we also have a bonus Tokyo session that we're going to do. And Powell is situated to speak at 8 p.m. Eastern. There is some rumors saying that it's his resignation speech, which is a lot of BS. I don't think that's what it is. But there is rumors floating around that that's what it is. But I personally don't think so. He's set to speak. We'll go over it when we go over the news. But that's also later tonight, okay? And don't forget, this month of December is the final FOMC coming up in a little bit next week. So and then we go into the end of the year. There's going to be some holidays you're going to see going into like the last week of December. I would personally maybe wrap up trading for this year when we get close to the end of December. Enjoy the holidays, stop looking at the charts and relax. And then we get back into it in the new year, starting 2026 and brand new resolutions, hopefully. I know a lot of you guys have been with us for the entire year of 2025, and it's a good time to reflect, go back, see how your trading is. Has it improved this year? Has it improved a little bit? Is there anything that you've learned? Are you still doing the same bad habits that got you in a mess in trading, or have you corrected some things? So everyone is going to have different results, obviously. It's like in school. Everyone has different grades. So same thing in trading. Some of you guys are doing really well. Some of you guys are still struggling. And some of you guys might quit trading altogether. But I hope that that's not the case. I hope you keep pushing forward. You know, there was situations when myself, I thought I was going to quit trading when I was younger as well. But I never gave up. I always had hope. I always knew I was going to figure it out. But it does take time. So hopefully no one is at the stage where they want to quit, because you can always improve, okay? There is a lot of us here at SST that can prove to you that we were going to quit years ago, but we're here now and we're profitable and we're consistent and we're doing good. So just to give hope to everybody, okay? And I hope everyone had a good weekend and relaxed and ready to go. Thank you everyone for joining, everyone on Zoom and YouTube, okay? So first thing is, we will get into the charts, but we got to get through, you know, our routine. We got to go through everything before. What is the news today, this week? Is there any earnings? Is there anything that we need to pinpoint this week that could cause some volatility in the markets? For the last month of December, okay? So we will also do NASDAQ and US30 alongside with gold, okay? Just going over this week's news. Today there was a lot coming out of Europe. I'm not going to break down every one of these low impact folders. I trust that you guys can do this, but what we got to do is start breaking down more of the New York news coming in. So you can see we have nothing at 8:30, normally 8:30 a.m. Eastern. We do have some North American high impact news, especially when we're going into COMEX. We don't have much today, but there will be here at 10 a.m. when we're wrapping up our call. So if you're going to continue to trade after 10 a.m., make sure you understand that there is a US high impact folder right here. ISM manufacturing PMI. If you don't know what it is, simply click on the folder. It tells you what it measures. It's purchasing managers in the manufacturing industry. It will tell you the usual effect, greater than forecast is good for the US dollar. The next release will be in the new year, January 2nd, 2026. We'll see another one. And this one is simply like a gauge. So anything above 50% indicates that the industry is expanding. Purchasing managers are purchasing, and below indicates contraction. So you can see the numbers. Previous month was 48.7. That's below 50. That's the industry is contracting. They're forecasting an increase of 0.3 points to 49, but still 49 is below the 50, but it's an improve from the previous month. So we'll see what the actual number is when it's released here at 10 a.m. Okay, and that will directly affect the US dollar, and it is a red folder. So basically anything that you are trading, if you're trading gold, it's affected. If you're trading the US indices, S&P 500, NASDAQ, Dow Jones, I'm sure it's going to be affected as well. Okay, so just careful at that time, right? And then if you're going to continue to trade throughout the day today, not much news in the afternoon. However, this one, what I'm talking about. So remember, we have a bonus session later. So 2 sessions today. We're going to have another one coming in around 6:30 to 8:30 later for Tokyo. So this will be running through our next session at 8 p.m. Fed Chair Powell is speaking. Again, like I was saying, there was rumors that it's his resignation speech. I don't believe in that personally. What it is here is he's due to participate in a panel discussion about his economic policy contributions at the Stanford University. Audience questions are expected. So you guys all know Federal Reserve Chair Jerome Powell. Trump already has his replacement in Haskett over here, but I don't think Powell is ready to go yet until his time is up. But we'll see what happens. Okay, so that's all over here. That's later tonight. Again, whatever he's talking about is about monetary policy, so it could cause some volatility at that time. And notice he's speaking at 8 p.m. That's when the futures market opens up at 8 p.m. Eastern later tonight. Okay, so that's news today. Going into tomorrow. Again, if you're going to be trading inside the European market, when London opens up, you do have some pre-London news regarding the pound, the British pound over here, GBP. You got lots of news, low impact news. Then we get into London market open, 3 a.m. You got some Spanish unemployment, Italian monthly unemployment. So you got some European news coming out. We'll come in and do our New York sessions over here. Again, we don't have much going on at 8:30. Not much going on tomorrow. So tomorrow's Tuesday. Tomorrow's like the more real day of trading. Today is Monday, start of the week, start of the new month. I think tomorrow will be more of the better trading volume, in my opinion. Okay, and there's not too much high impact news, so tomorrow would be probably a better day, to start initiating trades. Tuesday, Wednesday, Thursday normally is kind of the meat of the week where you get good volume to trade. Mondays and Fridays are normally the start and the end of the week. That's when you can get a little bit of choppy trading or some volatility or some market moves coming out of the weekend and going into the weekend, okay? And Wednesday, midweek, hump day, there is some Swiss news coming out at 2:30 right before the European market opens up regarding the Swiss CPI month over month. Then you got a lot of services coming out in Spain, Italy, France, Germany. You can see back-to-back folders coming out. So Europe is going to be pretty active this week. I'm going to be sleeping at that time. So normally, sometimes I do trade the European markets. I used to years ago. I used to trade it like I trade New York. But I've kind of gotten older and I need some little bit of sleep. So that's my kind of sleepy time there. But that's why I'm more active in New York and Tokyo. And then here we start to see finally. So 8:15 a.m. Eastern, we get some North American U.S. news 5 minutes prior to COMEX on Wednesday. ADP non-farm employment change will be coming out. You can see then we start to get some more news in here at 8:30. More U.S. news coming in prior to Wall Street. Then again at 10 a.m. we have another high impact folder. So it's our ISM services PMI. So very, very similar gauge, but this one now is level of diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. So today it's the manufacturing industry. This one will exclude it, the next one, okay? And then same, very similar. Above 50 indicates industry expansion, below 50 indicates contraction, okay? So that will be on midweek Wednesday. Crude oil inventories for all of our oil traders will be coming out midweek on Wednesday, and that's what we have going on. So, and then Thursday this week, a little lighter on the schedule. You can see it's pretty light coming out of Europe. We get into North American session right over here, 8:30 a.m. Eastern, U.S. unemployment claims. So these are our weekly unemployment claims. You're going to start to see they're going back to regular schedule where they are released every Thursday at 8:30, week over week. It was a little bit disrupted due to the U.S. government shutdown, but things now are going to get back into the routine. So previous week was 216,000. They're forecasting 220. That's an increase of 4,000 individuals applying for unemployment benefits. If this number is higher, it's going to come out red, and it's not good for the dollar, right? If these numbers are lower than 216 or 220, it will come in green, and that's actually good for the U.S. dollar. We want less individuals applying for unemployment. That means that they're naturally they're working. They're not seeking employment. Okay, and then finally to finish off the week, Friday, December 5th. Our first week into December. So if you're studying the weekly candles, this is where you're gonna get your close of your weekly candle. Then you can take a look at how the week opened, how it closed, new month. Is it bullish ignited? Was there a pullback? Is it bearish? Is it choppy? What do you see? Just like how we analyze 5-minute candles, you should be starting, if you're on a higher time frame, if you're a swing trader, you should be looking at how the monthly candle develops for the first week. Then you can actually dissect it and look at the actual weekly candle because it's going to close. And Friday, again, we start in Japan. Asian session has some late night news. Then we move into Europe. And you can see how busy it gets in North America on Friday. So here at 8:30 in Canada, we've got some unemployment rate. But more importantly, at 10 a.m., you've got some 3 high-impact U.S. folders on a Friday morning. Please be careful trading on Friday this week. You have core PCE price index month over month. You have your preliminary University of Michigan consumer sentiment report. Like to see what this is coming out of the government shutdown. And then we have our preliminary University of Michigan inflation expectations coming out as well. And then personal income month over month, personal spending month over month, and you can see the numbers and the forecast right over here, okay? So that's this week's news regarding US, Europe, and Tokyo sessions. Okay. Again, highlight the days that have the high impact news, and now those are the days you probably want to de-risk on those type of days. Okay. So, and then earnings this week, real quick. We don't have much before the open today. In the after hours, real quick, there's a few corporations in the after hours. Again, I'm looking to pinpoint those big solid names that you and I are familiar with. These other ones, I don't think that these are going to affect the S&P, NASDAQ, or Dow Jones. Have a heavy impact on them. So I just kind of just keep scrolling. Tomorrow I can see Tuesday before the open, I can see Bank of Nova Scotia. These are Canadian banks. Canada has big five banks: BNS Nova Scotia, CIBC, TD, BMO, Bank of Montreal. Those are so we might get some bank earnings over here in Canada. You got Signet Jewelers over here, United Natural Foods. I don't think any of these are going to really impact the U.S. markets. Let's move into Tuesday after hours. You have Marvel Technology, GitLab, CrowdStrike, American Eagle Outfitters. You can trade these corporations individually through buying buying stock, buying actual shares of the company and trading them, or you can do it through the option chain with puts and calls. But it's kind of difficult to trade right into earnings because earnings can be very volatile. Midweek Wednesday before the open, I liked following these as well. Dollar Tree, Dollar General, Dollarama here in Canada. The dollar store is a good indication of retail spending. Normally this is what we should see. We should see good these numbers being good, whether we are in a recession, whether the economy is tough or it's booming. People do go to the dollar store. You can get what you need, and you're not breaking the bank in these places. So I like to see good numbers coming out of these dollar stores. And then that kind of tells me that retail are still spending money. But once you start to see that, like Dollar Store and Dollar Tree and all of these things start slipping, and they start giving negative forward guidance, then that should be kind of concerning. Okay, so this is what I use as a gauge. I use these retail outlets, starting with the dollar stores. Then you got Macy's. Again, we continue with the banks in Canada reporting. So when the US reports their big banks, now we have in Canada Royal Bank of Canada. This is RBC. Will be reporting. So I follow financials in the US and in Canada. So I like to see what they're doing. Then we start to get into the bigger names Wednesday after hours. Okay. So Salesforce, CRM, big name. They report at 4 p.m. Snowflake, another big corporation. They're reporting at 4:05. You have some AI corporations. This one, C3 AI Inc., is reporting. So you start to see now Wednesday after hours, we start to get into the bigger names. These are the household names that are they are in S&P 500, NASDAQ, and Dow Jones. And then again, Thursday before the open, Dollar General Corporation. This is one of the largest American dollar stores over here throughout the United States. So we'll see what Dollar General is saying. Again, not just the numbers, not just the earnings and the revenue. I like to listen to the guidance. What are they saying? Are they talking about going into the holiday season? Are they talking about going into the Christmas season? Do they see retailers spending more money? Do they see them kind of maybe reducing their spending, especially during the holiday time? This is when you want to see consumers spending their money, during the holiday season, going into Christmas. If we start seeing guidance saying that they're not expecting as much shopping, then we got to know what's going on for the next couple months, because that's how we could be going into the new year. Okay, Kroger is reporting. And all of these, CIBC, this is another big Canadian bank over here. And then finally, my banking institution, I bank with TD, TD Bank here in Canada, TD Ameritrade. This is who I trade my stock and options through my own financial institution. I don't do it through like a offshore broker or something like that. Anything I'm doing in the stock and options market is through my own banking financial institution, okay? And then BMO, Bank of Montreal. So big five banks in Canada will be reporting this week. And then finally, to close off the week here, we got Thursday after hours, DocuSign, And then we move into Friday. Friday might be more of a lighter day. You have in the morning Victoria's Secret, and then probably not much in the after hours on Friday, okay? So not big names regarding earnings. You don't see like Apple, Nvidia, Tesla, Google, Microsoft, those big names, but there is still some up there. So they kind of go in tiers. Like your upper tier are those names I just mentioned. Second tier are like your CrowdStrike and things like that. And then you go into third tier, fourth tier. Everything is in tiers, okay? Just in the news right now, here's Mr. Santa Claus. Santa Claus is saying, I don't know if we'll get that Santa Claus rally. Normally in mid-December, there's always a strong rally in the market. Not always, okay? So listen to what I'm saying, not always. But that's what's called a Santa Claus rally, is there's a good push going into the end of the year and starting off the new year. However, rising volatility, Fed uncertainty, and shifting AI-driven market dynamics are clouding the December playbook, okay? So we have to go in understanding that there might not be a Santa Claus rally this December. So we got to know that, right? I know that, as should you. Do I expect everything to just start pumping December? If it is, I'll trade accordingly. If it's not, then I'll trade accordingly as well. But I'm not going to go in with the mindset just thinking 100% there's going to be a Santa Claus rally just because a few years there is a little bit of pattern of this. I got to understand that this is a different market. This is a different volatility. It might not be the same how it was last year or the year before. So just trade careful. Take it day by day, candle by candle. US stock futures slide as mood turns downbeat over here. BTC is taking a little bit of a beating over here. Bitcoin is down 5%. So crypto's taking a little bit of beating. Silver jumped 2% to record high as roaring rally outpaces gold. So it looks like a lot of liquidity is shifting into silver. I've been telling my friends and family for over 20 years now to buy silver, and no one is listening to me, and now they're listening when it's on the news and it's at all-time highs. But I've been telling them, where were you 5-10 years ago when it was less than 20 bucks an ounce, and I've been telling you to accumulate. Now they want to buy when it's above 60, 65, $70 an ounce. So you guys got to understand, people always jump in late, the FOMO. No one wants to buy when no one is talking about it. But that's where you got to learn how trading works. You want to buy when no one's talking about it, because when the whole mass is talking about it, that's probably a good time to start selling. That's my philosophy in trading, what I've learned over the years. When your neighbor is talking about something, maybe it's time to sell it. If they're not in the markets, right? If they just hear it on the news, that's probably they're too late. Okay. And guys, did you guys see on Friday the CME shut down? Okay, so you gotta understand that your risk management is the most important thing, because sometimes things like this do happen. I've been trading, as you guys have been in years. There's circuit breakers that can go off and shut the markets down. If the S&P 500, Dow Jones, or NASDAQ, a certain percentage, like if it goes down 5% in a matter of a certain time frame, it's a circuit breaker that goes off and will shut the markets down from continuing to trade until things stabilize. So they do have these things. CME was a different story. They're saying that the data center overheated and they needed to cool it down. I don't know. I don't believe that shit. But what I got to do is, anytime markets shut down like that, your risk is your only thing that can save you, right? Until the markets open up. So that happened on Friday, unfortunately. And then after it got started up again. So hopefully this week they've corrected that and we don't have any issues. Okay. Bitcoin plunges to below 86,000 in risk off start to December. Trump says he's made his Fed chair pick to replace Powell. That's Kevin Haskett. We could be the replacement. He's a puppet to Trump, so if he gets in, whatever Trump says will get done. If we have 0% interest rates, we're going to have 0% interest rates. Then the markets will start pumping again. Who cares? Do I mind? I don't mind whoever it is, but again, we got to trade accordingly to whoever it is in there. What else we got going on? Oil rises after attack on key Black Sea terminal. This is in Venezuela over here, okay? So I've been saying for months now, I don't think US is sending 20% of their military and their aircraft carriers to go to Venezuela to take care of some fishing boats or some drug boats, cartels down there. I have been saying for months now, I believe their agenda is there for crude oil, like they did in Iraq back in the day. So that could be their agenda. Again, I'm not here. I'm just speaking my own personal opinion. Maybe they are there to take care of some drugs, but they're probably there to take care of some other things. They're sending 20% of their entire U.S. military, including their aircraft carriers. That's a lot to go over there. So who knows what's developing in Venezuela? But if I was trading crude oil, I would be keeping my eyes on this, because that will directly impact the price of crude oil and the supply and demand. Copper marches to record high as supply fears grip global market. So we can trade precious metals. We don't always have to trade gold, silver. There's also copper. Copper has been like a sleeping for years. You know, I've been telling individuals to accumulate copper as well. It's very cheap, and now it's kind of 2x, 3x its price for years now. So copper is also out there as well. So you can trade a lot of precious metals, guys. You don't just have to trade gold or silver. There's others out there, okay? What else we got in the news? SoftBank's son cried about NVIDIA stake sale to fund his AI bets. All of this stuff in the news, okay? And right now, we've got the markets are a little red in the futures. S&P is down negative 0.55. Dow is down negative 0.4. NASDAQ's negative 0.7. We got Russell 2000, negative 0.77. VIX is in the positive, so we've got some volatility today. And also gold is up almost 1% at $38 an ounce, okay? And just finally over here, guys, sending out signals, trade ideas. We do this in this group as well. Here was a setup to sell US30 right over here. So you can see we were looking for sells below 47,700. When the markets opened up, they kind of initially came up here, but then they really started to push down. So that was a move for over 200 pips to the downside. Congratulations to those that got it. Also, the commodities section right over here, there was a gold sell below 4,220. Yes, it did creep up here, you know, go into that drawdown area, but eventually got some volume closing down, and you see how the pullback came right back up, and then the lower high right at the point, and then the real second leg of all that selling volume comes in and starts pushing the market down. And that one ran for more than 100 pips. Okay, guys. So if you need some help with trade ideas, trade signals, some charts, some trade management, we do offer that as well here at SST to go alongside with your learning. And finally, thank you to everyone joining on YouTube, over 200 viewers. We appreciate you guys. There is a free Telegram channel, Telegram group pinned at the top of YouTube for you guys. If you guys are not subscribed to this, I suggest right now, click on that link, because it gives us all of the YouTube links when we go live. You know, some of you guys don't have your notifications on, or you're not subscribed to the channel, but if you at least are in this Telegram, you'll get the one when I'm doing the Tokyo session later. Tomorrow, again, we have 2 sessions, New York and Tokyo, so you don't want to miss out. So this, and then you get to see what we're doing in here as well. Here's a blog that we just sent out, Importance of Charting and Trading. So I will get to this blog in a moment, and I hope you guys have already done some top-down analysis and ready to go for the week to learn how to do this. So I'm going to do a little blog on why it's important to take your trading, your charting to another level that will help your trading, okay? And also, happy Thanksgiving weekend to everybody coming out of the U.S. Hope you guys enjoyed. You guys are all stuffed with turkey, football, and you guys relaxed. Before and after of our trade ideas here at SST. And the Black Friday deals. Today's Cyber Monday. Again, it's continuing. So if you still want 50% off on any plan here at SST and want to sign up, I believe maybe today might be the last day to do that. So it's still on. If you want to join, you still have that chance. Just come over here and utilize this code on our website, stocksnipertrading.com. And if you need education with myself and Dave, there's lots of education courses, webinars, boot camps, lots of webinars over here, and everything we do at SST, everything we talk about on these calls, I'm sure that there is some breakdown of a webinar. in more detail of what we do. Okay, look at the live session schedule this week. So trade signals all week, Monday to Friday. Live New York's, okay, this is what we're doing today, 6 to 10. You can see we're doing a Tokyo session later in the evening, 6:30 to 8:30. That will be with Powell's announcement at 8 p.m. Okay, so you can join in. Tuesday is a busy day. Dave is coming in pre-New York private Zoom, 8 a.m. I'm doing a post-New York and a Tokyo tomorrow. Midweek Wednesday, again, Dave, 8 to 10, private Zoom. And then I'll be coming in for a live post-New York, 11 to 2 this week. And then finally, Wednesday, we'll do our final kind of Tokyo bonus session. So 3 bonus Tokyo sessions this week. And then Thursday, Dave will be live New York. I'll be coming in post-New York. And then we kind of taper off our week at the end of the week. Because we got some football on Thursday nights, and then Friday I'll be coming in doing a post-New York session. So if you guys aren't aware of our trading schedule, come to our website and look at our live schedule. We update this thing on Sundays, okay? And the blogs are all available for you guys. There's some of these outlooks that are for members only, but every other blog is available to everybody. I want to go over this one, importance of charting in trading. Taking charting seriously in trading is crucial for identifying critical points of interest, POIs, points of control, POCs, and specific zones, those zones that we find, a consolidation zone, a support zone, or a resistance zone, which can significantly enhance consistency and profitability over time. So let's talk about this real quick. Number one, why do we want to take charting seriously? Because I know that there is some of you guys that are taking it serious, and I know some of you guys are not taking it serious. So you figure out which group you're in. I take charting very serious. I'm a very technical trader, and I take my charting very serious. So I spend some time doing a solid top-down analysis for the securities that I trade, and it helps me trade that security throughout the week at those critical areas, which allows me to get into higher probable trades and not chase and be more patient and disciplined. So how many of you guys are taking your charting a little bit more serious now by figuring out higher time frame zones? So it all starts with a top-down analysis. But what you can do is enhance decision making, okay? So by identifying support and resistance levels, traders can make informed decisions about entry and exit points. If a stock security consistently bounces off a particular price level, that's an area of support. Buying at or near this level can increase the probability of a successful trade. So if I notice that gold keeps bouncing off of 4,200 and it keeps doing it 2 times, 3 times, then what it's telling me is 4,200 is a good supporting area building demand. So every time it comes down there, I have a good probability of continuing to buy at that level until it breaks down and shows me that 4,200 is now where the sellers control that area, okay? But it can help you with decision making going into the future. Also, risk management. Some of you guys are suffering from risk management. So knowing where the points of control are, areas where most transactions occur, can help set stop loss orders effectively. So you guys see, sometimes when I'm trading, I just set my stop loss right above the point of control zone. And it's a really tight stop loss. And you can see sometimes I survive that trade by just having my stop loss just above that point of control. I can increase my stop loss higher, but then I would have to decrease my position size to make up for that larger stop loss, okay? But it helps you understand where to place stop losses effectively. If the price breaks through these levels, it can indicate a change in market sentiment, prompting an exit to minimize losses. So sometimes when my stop loss gets hit and that point of control is now reversing, I no longer want to be in that trade because now it's showing me that that point of control is no longer holding. So now the trade can move in opposite direction and I don't want to be part of that anymore. So you have to naturally take a loss. I know it sucks. Everyone hates losing and everyone gets pissed off when you get stopped out of the market. But sometimes it's for the good. Sometimes when you do get stopped out and you look at it, the trade could run another 50, 100, 200 pips against you. And if you're still in that trade, you're just taking a further loss where you could have really taken a loss, but a controlled loss. So When you guys get more experience in trading, you guys will understand why traders take losses, but they're controlled losses. We're not trading reckless and keep moving up our stop loss and keep moving it up and praying that it's going to go down. That's not trading. Hope and prayer is not a trading strategy. So eventually you guys are going to understand what I do. You're going to understand why I take a loss, right? But it's more of a controlled loss. And that shows your maturity as a trader when you understand this. Some of you guys might be your first week of trading and not understand this yet, but eventually you will. You will understand it with more time you invest in the markets. Trend identification. So we always say the trend is your friend. Trade with the trend until the end, right? So chart patterns. This is called pattern recognition. Chart patterns like head and shoulders, double bottoms, double tops, triangles, symmetrical triangles, descending triangles, flag patterns, all of these things provide visual clues or cues on potential trend reversals or continuations. So some patterns, as you know, are trend reversal patterns, and some patterns are trend continuation patterns. So make sure you understand your patterns, your pattern recognition. So recognizing these patterns allows traders to capitalize on upcoming moves rather than reacting late. Volume analysis. So everything moves on volume in the markets. So when you're studying the candlestick, there is some candles that have much larger volume than other candlesticks. So high volume at certain price levels indicate strong interest. So like I was saying above, if it's coming down to that 4,200 area of support, it's showing me on gold, and now the volume increases delta green, then I know more buyers are entering at that supporting level. So that could strengthen my decision to continue to buy at that zone as opposed to sell at that zone. So volume analysis alongside with your technical and your charting can also help with confluence and help your decisions. So high volume at certain price levels indicates strong interest. A trader who identifies these volumes as support or resistance zones can anticipate future price movement more accurately, since these areas often act as magnets for price action. Improved timing. Okay, so timing is also an issue in trading. You can never time it appropriately. You might be buying at the highest point, FOMO, or you could be selling at the lowest point, but that's where you should be, maybe doing the opposite. So also doing a thorough analysis, charting, can also improve your timing in trading. Fibonacci retracement levels can help pinpoint potential reversal zones after significant movements. So your Fibonacci tool is a very, very important and easy tool to use. It's done for you automatically, so there's not much that you have to do. You don't have to really calculate anything. Everything is done for you. It's just you have to learn just how to plot it. That's it. Traders using these tools can better time their entries and exits, improving trade success rates. And finally, market sentiment insight. So candlestick patterns, price action. You got to identify your candles, know your dojis, your engulfing patterns, your hammers, your hanging mans. What do these mean? Okay, not just recognizing them. I know some of you guys can recognize a hammer candle, but also you got to understand that that was a bearish candle when it opened and went all the way down and found support, and that's why it's got a big wick rejecting, and now it's closing at the highest point where it opened, and now the candle is a big green hammer. So you have to understand what happened in that time frame. How did it shift momentum like that, and why did it shift momentum? So it's not just, yes, you can identify a hammer candle, but also understand the meaning behind it, okay? And that's when you can really take your trading to the next level and understand what is going on in that particular time frame, okay? So candlestick patterns reveal shifts in market sentiment and momentum. Recognizing these formations enables traders to detect when momentum might be shifting, providing an edge in timing trades. Okay, so on this chart right over here, can you guys see this chart right here? This was a chart that I was looking at. So this is gold on the 5 minutes. You see that there's a 5-minute downtrend making lower lows, kind of coming back up, but you see it couldn't, above 50% of that candle. See, there was an impulse, no volume closing above. Again, they push it back down, find some support. Again, it tries again. So you see those multiple impulse moves. If you bit on those buys up there, you're in drawdown and you could get in trouble. But finally, you see the 5 minutes come down to my yellow line area. So the yellow line area is more of a daily point of interest. So you see now how the 5 minute bodies start to respect the daily point of interest. They bounce. They didn't come all the way back up here. Lower high, again, below 50% of this bearish candle. They push down. There's a second bottom now created at this daily point of interest. And it pushed right up again. And you see how it's suffering. It can't break this resistance up here at 4,155. And then again, finally, a third bottom at this daily point of interest. This is the one that added the majority of the volume. So you see how many times you could have literally bought right here, and right here, and you would have been in profit. But finally, the third leg is the one that broke this resistance. And you can see right there where I circled it, it broke, volume closed above, and then you see the retest where it came back down, and now it's retesting this 5 minute resistance red line, turning it into now, flipping it into a 5 minute supporting line. And then we pushed up, we filled the imbalance where? To the next resistance right up here. So you see where all of those 5 minute candles could not break above, and you see how we filled that imbalance where? Right up to that red line, and then the sellers stepped right back in and pushed the market down. And you see now how it's building a higher low right above the daily point of interest yellow line. So that's telling me that the depth of market is now protecting this area and building to continue to come right back up. So that's just an example, guys, of how to utilize charting and to favor trades at your daily points of interest as opposed to just trading anywhere on the charts, right? So does that help, guys, with that example right there of that illustration? And then finally, by focusing on these critical elements during chart analysis, traders can develop a structured approach leading to more disciplined and objective trading, ultimately enhancing long-term success. And then this is kind of like an example of just a Google search and what I showed you. So you see how the 5 minute candles are coming down. It finds one bottom, it comes up, there's the neckline, could not break, comes down for a second bottom, and comes up and finally breaks and retest this, and it's gone. But if I was just going by this chart, you see this double bottom down here? Had I done a top-down analysis, maybe I know that this is a daily point of interest. Then it helps me understand why that double bottom is more stronger at a daily point of interest as opposed to not doing anything, right? So in this situation, there was no top-down analysis. In the situation I showed you, I had a yellow line there, and then you can visually see how those 5 minute candles bounced off that daily position. And finally, I'm going to say, someone's going to say to me, well, Ron, is this always guaranteed if I do that? No. But nothing in trading is guaranteed, so make sure everybody understands that. But what we're looking for is not guaranteed trades. We're looking for more higher probable trades, okay? Trading is all about probabilities. If we can find high probable trades, that's our job as traders. And if we can manage our risk at the same time while doing that, and we're patient and we're disciplined, over time, we're going to continue to make money. As long as you don't over leverage your position and you blow everything that you've earned, okay? So that's how trading works. And I hope that you guys want to trade for more than a week, a month, a year, maybe do this as your supplemental income for years to come. But you got to learn how to trade properly, okay, guys? And that's kind of like a blueprint to get you guys started, okay? So if you guys want that blog, it's right over here. It's available for you guys for free, Importance of Charting and Trading, okay? So I hope that you guys took some time this weekend to do a little bit of charting, some top down, because that's what we're going to start in just a moment. So if you guys can like the channel, guys, we do appreciate it. If you guys can subscribe to the channel, we also do appreciate that. Hopefully this week with all of our additional sessions we're doing, maybe we can hit 90,000 subs and work our way up to that milestone of 100,000, okay? So thank you guys for all of the support. If you're not subscribed, I recommend that you subscribe. If not, I don't know why. We give you guys a lot here for free, okay? Now we're going to get into gold, and finally a disclaimer for YouTube and for everybody. SST, we are not financial advisors. We're here for entertainment, education. We do take live trades with you. I'm trading my own live account. I'm managing my own risk. I'm not a copy trader. We're not a signal group here. We will walk you through our analysis. And I expect that you guys are all adults and mature enough to understand that trading has risk. Nothing is guaranteed in trading. So we do take losses on these calls. We do take wins. We do take break evens. But we're mostly here for education and to teach. Okay, guys? So everything you do is at your own risk. If you take a loss, that's on you. If you take a big loss, that's on you. If you take a small loss, that's also on you. If you make some money, that's on you. If you make a big win, that's on you as well, okay? So I can't control all of those things, but just trade properly, okay? That's it. We want to be here with you guys, and we don't want to get shut down. So just trade proper, okay? And one final thing, please don't spam in the chat. It kind of gets annoying for myself and for you guys, where you're just spamming in there, because then I can't see what you guys are actually saying and answer your questions, okay? And if you guys can kind of moderate the YouTube channel, you know, we have moderators, but sometimes maybe you guys, if you see someone spamming, just, you know, give them a heads up, say, just stop spamming. Things like that, because it ruins it for you, it ruins it for me, it ruins the flow of the session, and just like that, okay guys? So you guys can all be moderators as well, and we can all do this effectively together, okay? So I'm going to get started with gold. Do you guys have any questions before we get started? We're going to do a thorough top-down analysis. It's still early, it's 6:40 a.m. Eastern. We've got a lot of time this morning. And just want to say to everybody on Zoom, good morning. Sang, welcome. Justin, welcome. Justin, I hope you had a great weekend. Mike, welcome. Vinay, thank you for joining. Reese, good morning. Forex Barks, welcome. Brendan. Sonia, good morning to you. Thank you for joining. I hope you're doing great. It's been a while, Sonia. Kira, welcome. Mohamed, thank you for joining. Kool-Aid, Wayne, Pramilo, thank you. Thank you, guys. Conrad, Zizi, welcome. Chris, welcome, guys. Forex, that chart is scary red. The crypto chart, Bitcoin, oh my God. Everything in crypto is bloody red right now. Yep. Welcome, guys. Christoph, good morning. Thank you for joining. Sally, welcome. Musharraf, welcome. Mike, good morning, guys. Alex, welcome. Okay. And everyone on YouTube, thank you guys for joining as well. I appreciate all of you guys. CS369, welcome. Thank you for joining. Peter, welcome. Justin, again, welcome. Tatinda, welcome. Trading with Confidence, good morning. Thank you guys for joining. J Violet 777, thank you for joining. I appreciate you. Welcome. John Sparks, welcome. Beeb, everybody. Good. And I can't go through the list for everybody, but I do appreciate you guys. I kind of give shout outs to everyone at the top of the list. So thank you guys so much. Welcome, guys. Okay, so I'm going to get started with a top-down analysis from the daily, bringing it down to 4 hour, hourly, finally down to the 5 minutes. I'm going to be doing a thorough top-down analysis, what we just did on the blog. We're going to be looking for daily points of interest, points of control, and high impact zones, what we can trade off of, okay? And if you guys have already done it, fantastic. That's what I hope for, and maybe we can match our points of interest, control zones together. If you guys want to learn with me, this is probably the time to learn how I do this. Either follow what I'm doing, pay attention to what I'm doing, or you can kind of copy what I'm doing, and then after the call, understand why I place zones and lines at these areas, okay? So this is how it's moving on the 5 minutes. I'm not interested on the 5 minutes right now. If I wanted to, yes, I could come in and start trading. But again, I don't have anything on my chart to let me know how it was trading last week. Are we in a zone? What are we doing right now? So, it's kind of trading blind basically. So let's start off on the daily. You can even go higher since it's a new month. You can start off on the monthly. Like you can see the last few months. Like we had this big accumulation starting in July, over here in in the new year, all this year. And you can see how long it's been accumulating in 2020, in COVID, 2021, 2022, 2023. You can see it was in a zone of accumulation that finally they broke it out. Okay, there's been pullbacks, but it has not crashed gold down. It's continued to move to all-time highs. This was this year where it was kind of accumulating in here, all of April, May, June, July, August, summer months, and continue to break all-time highs. Look at it. Like, even if you're analyzing last month's candle and now that's closed, I would cut it in half. I would figure out a point of control, zones as well. We don't have too much more of a wick to fill. Maybe this month it will fill it and we've got a new all-time high. Okay, so it's very bullish still. Okay. Now let's go into the weekly. You can see the weekly now. Okay, there's a little bit of a chart pattern recognition. It came up one top. There's the neckline right there. It's coming up for the second top right now this week, and it could fill those existing wicks and go for a new all-time high. However, there is a rejection there and a rejection there. It could come in and get rejected again, and then you've got your double top M pattern on the weekly, possibly ready to push down and come down into here, okay? But right now, it is still technically bullish, pushing up. This is the second leg. So the second leg traditionally has the more stronger buying volume. So we'll see if we can continue to push. And if you notice how we closed last week, this was how it closed last week. It was bullish, small pullback. Look at where it closed, right at the high. And we just opened, small pullback. It's got basically no wick, so it's already popped. And now the weekly candle is starting to drive. But you see it's got to drive and fill these two upper wicks on the week of October 13 and October 20. So, and that's how close we are to basically the all-time high. Not too far away from it, okay? So our weekly is producing a nice little supporting area. If I wanted to start charting on the weekly, right there, look at 4,000. 4,000 on the dot. Look at it, how it's holding a body, a body, a body, a wick. 4,000 psychological level is holding bang on. And look at it, continue. So if we close below 4,000, coming down here, close below, 4,000 might be that resistance neckline to take us selling off back down in here. This might be end of December, maybe in January or February of the new year, if gold starts slipping a little bit. That's an area I would place an alert right at 4,000. You can visually see it, okay? So let's go into the daily now. So now breaking down the daily candles. Okay, we've got this massive uptrend rally coming. There was this big pullback right down there holding. So you can see it produced a double bottom and didn't break down further on the daily, came back up, but right into there, that point of control of that big bearish candle. I'm going to get to all of this, but I just want to show you how it pushed right back down. But you see it made higher lows, volume holding above 50% of this big bullish candle that closed above that resistance right there. And we're starting our next leg up. So it's already filled that previous wick. And now we could continue to drive to the all-time high. However, they could pull it back down into here, right? So let's start off our analysis. Let's pinpoint our all-time high. I use an orange line, kind of like Donald Trump's makeup up here. 4,382. That is our all-time high. It tried 3 times to break that all-time high right here on October 17, October 20, and October 21. It failed, and then sellers pushed it right back down. So you can see on the daily, we're coming right back, maybe up to test that, okay? So is there a zone? Yes. From that orange line right down to those bodies right there. That's where I figure out that there is a sell zone, resistance, sellers, supply zone, whatever you want to call it, okay, that zone. And what I do is I stretch it into the future, okay? So now I can see if we start coming up here this week on the daily, is it going to break for a new all-time high? Possibly, but we have to transact in this zone, and there might be sellers there. There was sellers there on that wick, there were sellers there, and there was sellers there on that big bearish bar that came down. So what happens if it's coming in here? This might be the second top. That's the first top. This could come in for the second top, and then it gets rejected back down, okay? So all I can say is when it gets in there, I have to visually see what's going on, okay? We're not there yet, but we got to continue focusing on where we are. So on this move where that big bearish candle came down, let's figure out the point of control. let's figure out, let's cut it in half. Opening price, closing price. Okay. If you want to fix up your Fibonacci tool to kind of just identify the point of control, this is how I do it. Eliminate the 236, unclick it, eliminate. You want to keep the 382, okay, because that's one of the points of control. You want to keep the 0.5 because that's our cut line, that's the 50%, and you want to keep the 618. Eliminate the 786, eliminate the 1.618, and just keep the 0 to 1 where you're placing it from open close, okay? So you see now the only lines kind of on my, if you want, you can also get rid of the 0 and the 1, okay? You can get rid of the 0 and the 1, okay? And then all I have is, that's it, the 0.5 and the point of control. So it makes it more visual for you to see, okay? Oh, also the 236, I got to get rid of all the way down there. Okay, so you see how I did that, guys? Now, from this big bearish candle, I can locate half of it, cut it in half. I use a yellow line now on all of my daily points of interest, okay? So you can see on this move when it came right in there, right at that 0.5, sellers were there, right at that point of control and pushed that leg down. Now you can see, look at Friday, how we closed right at it, okay? And then we opened today, it was bearish, got a wick, short wick, and now we're popping above it, okay? We might be creating this as a supporting zone this week, but there's also a bearish point of control from right there, the one line above, either the 382 or the 618 right there. So you see how now I got that point of control of that body, stretch it into the future. Now I can see how we came in there and went back down. Now look at, we closed inside there on Friday. It already came down. It's already retested, and now we're moving back up. So today, let's see, can it get up to the top of the red box, which is 4,270? And can we maybe continue filling that imbalance to the bottom of this red zone, 4,325, okay? So now that I've recognized that, I can stretch that zone into the future. Notice how I still have it red because it's on the daily and I don't see a blue daily candle closing above here yet in order to flip this green. So we're still trading in this red zone right now, but we do have a strong move, okay? Now if I want to go look below me on the depth of market, I can see when we closed below, there was a little bit of a bear flag right here. And again, another significant drop. So if we continue now to look at where we found good daily support, right there, yellow line, 3,927. I would round it down to 3,925, those 0.25%. The reason being why this is good supporting level is because when it came down with that strong leg, it found one bottom, bounce right back up. There's the neckline right there. Sellers should have been able to break it and create a new lower low. They didn't. They failed. Those buyers stepped in. There's the double bottom, and there's the closing bar above the resistance. So you see, but look at how it came up bullish and could not break that point of control. Then the sellers came in, but you see it didn't come back down to that daily level. The bodies now, volume right here, 4,040, are holding a higher low. And now you see we're pushing right up. So today we're going to see, can we break out of here? Or is it going to get rejected back down and we're going to push down? Right now it's still very bullish. So you can see you've got good daily points of interest right here. 4,044. See how we have a wick, a body, a body, a body. You know, down below here, you've got great support demand right in here from that big bullish daily candle. If you stretch it across, then you can see that wick came right into it, back up. That wick traded right into it, and that's holding good, solid support below us, okay? So we are in a daily kind of continuing this uptrend, coming back up. You can pinpoint this at the wicks if you like, at the bodies, wherever you like, okay? I'm gonna just place it at the wicks, and we see we're still in an uptrend pushing right back up. But now, see how close we are? I could also figure out some points of control, also points of interest down here. You see right over here where there was bodies, right there, body opened down there, kind of closed right there, open right there. You see this yellow line? We don't have any volume closing above, push back down. There we get a volume closing above, there it closed below. So you see that yellow line, how it cuts that black candle in half, and you see the yellow line is resistance back down. There we closed right above it, so you see how the yellow line is now holding support, okay? So if we come back down, That might be a good buying area, right at that trend line, right at that point of interest. 4,125, 4,130 might be a great buying opportunity. If we can buy down there, it's better, it's deeper, it's discounted. If we can buy all the way down there, that's probably the best area to buy. So what I like to do at these yellow lines is add an alert at each one of these zones, okay? So I right click this yellow line, add an alert. So I've created an alert. If gold ever comes down here, whether it's this week, next year, I will get an alert. There's my clock. I can add another alert here. So I don't necessarily have to sit all day at my charts and watch this. I can just create alerts, okay? You see what I mean? You can just create alerts. When it gets down there, I get a notification on my mobile, at my trade station. I get emailed. I'll get a notification. See how I have an alert here, an alert here, an alert here? Doesn't mean that when it comes down there, I just get an alert and I just buy blindly. Because what if it comes down there and get an alert and it's coming down with big black volume and it actually closes below there? Then when it comes back up, I still get an alert there, but it's now resistance. Then I could be selling to come down to here, right? It's just giving me a good probable setup to either buy or sell. If I'm trading with the trend, I want to continue buying these pullbacks, okay? Now, again, let's just maybe look at Friday's fresh volume because it's a big bullish candle that opened, small pullback, closed near the high. Can we grab our fib tool? Maybe just identify the opening price of Friday's volume and the closing price. Let's figure out where 50% of Friday's volume is, right there, holding steady right below 4,200, 4,198. Do I have a point of control of Friday's volume? Right there, okay? So I can still see, look at then today's pullback. Pulled back, right at the top of our green zone at that point of control and continuing to push up. So we've got a daily pin bar, daily bullish pin bar candle trading near the highest point of today. Okay, so let's just run it now. Today's, we can go from our opening, our closing on Friday, our opening. So if I want, I can bring this yellow line. This yellow line is exactly 50% of this candle. If I want to manipulate it down just a little bit to the opening price, I can. But when I add my daily bar indicator, it will show me where the opening price is. So I'm going to leave that yellow line right there because it's telling me it's exactly 50% right there, okay? So I see where we opened. It was initially bearish today when we opened. It was black candle coming all the way down. You see where we found our lowest point of the day? I'm going to place a purple line right there. That tells me that's today's lowest point, 4,205, and you still see how we're above the point of control from Friday's volume, okay? And the buyers stepped in. They're right there. They were pending there. They got activated. And look at they came up. They pushed that big black candle all the way back up to the opening price. And they flipped it. And then you notice part of your technical analysis is wick analysis. You need to look at your prior candle bar's wick. It's a short wick. It's not a relatively long exhausted wick. It's a short wick. It's kind of like a firecracker. Now you light that small wick and you have an explosion. And here's the explosion. So you popped and you continue to fill through this big selling zone, and we reached the highest point so far. That's our high of the day, 4,262, and there is a little bit of sellers there pushing this volume down. So we still have this much bullish volume that could continue to push to the high and break out of here, and then we're targeting the top of the red box. And then you can see from the red box to the red box, I just have a gray chart. So yes, it could fill all of that imbalance. I'll measure that so we all know is if we start breaking out to fill from there to there, that is approximately a $60 move in gold, okay? So that's 600 pips, okay, if we fill that. So I'm a scalper. I would love to get 600 pips on a candle, but what I do is I cut that zone in half right here. From the top of the red to the bottom of the red, I just cut it in half. You can visually cut it in half just by doing that and utilizing the yellow daily point of interest. That's just me guessing that that's the halfway point. I don't want to guess. Let's see how accurate Ron is. So I plot it at the red, top of the red to the bottom of the red zone because I know that those are big zones. Look how close I was to, cutting it right exactly in half. I could also find a point of control or hidden block if I like as well. When it's coming in there, right in there. Okay, so now that's a red zone, just letting me know that that could be where sellers have a hidden block right there in the market. Anywhere in between 4,290 as high as 4,305, with the midpoint being exactly 42.97, right at that psychological level, 4,300. So if it continues to come through here bullish, maybe right in there at 4,300, we're going to start to transact in there, and it might push it back down to retest this, and then it could break that block, and then we'll continue to go up here. But you got to understand, like, that could be my personal goal. If it just comes right through here, right into that red box, that's 250 pips, up to 300 pips, okay? I could also, like, take it even further and start breaking it down from this red zone to that red zone, cut this in half, all depending on what time frame trader I am, because I can't see anything through here. It's just a big blue volume going up, it's a black candle coming down. A blue candle going up, a black candle coming down. You can see how it was barcoding. So are we going to fill directly right through there, or are they going to start putting some resistance in here? So that's what we got going on the daily. If you ask me, the daily trend is still very bullish. But we have to acknowledge that we do have some sellers up here. Are they still protecting this all-time high? We will figure this out this week or maybe next week, okay? So from the daily, let's go down to the 4-hour. If you look at the 4-hour trend, it pushed all the way up here on Thursday, came back down. Monday, starting last week, Monday found a bottom, came back down. We found some good support on the 4 hours again Friday. So you see how long it came down. Tuesday, Wednesday, Thursday, Friday, took the 4-hour candles come down, then they started pushing up. We kind of consolidated all through here again last week and finally started to push on that Friday. Friday was that big, strong volume, and you can see exactly when it started coming in. At 6 a.m. It continued at 10 a.m. It continued into the close. Now we have our opening bar on Sunday night. So that's where it was bearish. You see how this 4-hour candle, 6 p.m. open bearish, came down. That's what created the low of the day, came back up and closed. Again, from 10 to 2 a.m. It came back down bearish, produced a higher low, couldn't get that higher high, closed right there. Now we opened, this is the European candle, 2 to 6 a.m. See, it opened, higher low, created the highest point of the day and closed right there. Now we have this candle from 6 to 10 a.m. This is a very important 4-hour candle, especially for us trading gold. Reason being is because this is start of pre-New York 6 a.m. This candle is going to represent COMEX at 8:20. This candle is going to represent any North American news at 8:30. It's going to represent Wall Street market open at 9:30, and then it will close right when we're getting our ISM manufacturing PMI news at 10 a.m. and then a new 4-hour gold candle will open at 10 right when they drop that high impact news. So you can see it is moving. We're moving in this big red daily zone, but it's still building. We've got higher lows, higher lows, higher lows at the wicks. One other thing that if you want to dissect this European volume now, again, I can see a little bit of a fair value gap from this wick to that wick. I can pinpoint that fair value gap, but I could also do it my way, where I just go from the opening balance to the closing balance. And you can see I can identify 50% of European volume right there, 0.5. I'm not going to use a yellow line anymore. I'm going to use a white line. Any white line on my chart now represents an H. It represents either a 1 hour, a 2 hour, or a 4 hour time frame. The yellow represents anything on the daily, the purple represents the lowest point of the day, and the purple represents the highest point of the day, and I know I'm trading in a bearish point of control right now. So I can see that the 4-hour candle came down. You see what it's respecting? The point of control above, right there. So if I draw like a green zone in here, this is representing the European volume is still showing strength on gold. It came down bearish, but it's still holding. And it went back up, it flipped. We're at the opening balance now of this 4-hour candle, which is going to close in 3 more hours. So it's already flipped up, but produced a lower high from the daily high, and they're pushing it down. So maybe we're going to start to see some consolidation in here. Maybe we will attempt to break today's daily high and get up to the top of the point of control. Just as a scalp, just from the purple line, I can do math in my head now. 62 to get up to the top of the red line is 68. That's a $6 move. That's 60 pips. That would be a nice little scalp from here just to there and get my money and get out, because it could reverse back down and retest this. If it breaks out of there, then when you get more than 60 pips, you get 80, maybe 100. But if it closes above there, then momentarily we'll flip this point of control red to green. Maybe this will give us some support going forward, okay? So you can see we are still holding up. It's building its way back up, but overall, we're still, if we're buying, we're still countering the all-time high double top sell, okay? So that's why I have this hidden block up here and that bigger red block. If we're continuing to drive, then I guess we got to continue to buy with this trend that we got going on. If I go into the hourly now, okay, now we breaking it down even further. Now I can see the hourly move is bullish, okay, pulled back. I can see exactly what time now it hourly hit the lowest point day, 6 p.m., right when the day opened, right Sunday night. Then there's 7 p.m., there's the futures 8 p.m., 9 p.m., 10 p.m., there's 11, there's midnight my time, came back down, right there, closed above. There's 1 a.m., 2 a.m. Here's London, this spin top candle, broke out, came down, closed inside. 4 a.m. we closed above. Here's 5 a.m. I can see we hit the highest point of the day, 6 a.m. and 7 a.m. Now I can see that the hourly candles are kind of consolidating in from the highest point of the day to the top of this green box. This is our flag where the hourly volume now is consolidating. So, and then if I look back, I go back, I kind of back test myself. I can see when the volume came in this consolidated zone, back down. It came in again, back down, it hit the highest point of the day, and we're just trading inside here too. So it could just continue to do this, where it came in, there's a top, neckline, bigger neckline is down there. It looks like, look at where the bodies are. Body, body, body is lined up with these bodies as well, right there. So that could be the formation of kind of the double top, but you see that 4-hour point of control zone, maybe we see some hourly volume close below here. We flip that red, and then we could sell back down. Where? Down to here, where these bodies are. Okay, so I'm going to place a white line. Remember, all white lines are on the hourly, because I want to know if it comes right down there and I'm going to sell, that could be where it supports there. That's where the buyers could be stepping in. If that white line can't hold, then I know we're filling these wicks coming down here to get to the bottom of the red box and ultimately the lowest point of the day. Okay, so you see now how I mark up my charts on the hourly, but right now it's still pushing. It created a higher high, could pull back and continue to break for a new high, then I'll be buying. Now what I could do is, you know this zone in between here, this gray zone? Now I can look back and see when there was some hourly transactions in this gray zone, right over there. You see it? So if I continue going backwards, right there was the last time in this gray zone was where I had hourly transactions. Right here, October 16, right here, October 17, right here, October 20, and right here, October 21. So again, I can just dissect inside here. There's a body to a body, there's a wick, there's a 50% of that body, then I'm kind of in that wick. So if I'm looking for another white line as a scalper, maybe somewhere right around here. So you see how I got that hourly close, hourly open, body, body, right there close below. See where it came up? The white line now is resistance pushing it down. Right here, you see where the volume closed above. It used the white line as support. Right there, it kind of broke, but came back up, pushed up. Look at the retest. That big black hourly candle stopped right at that white line. So I know that 4,279, 4,280 is a good point. If we break from this red box today, 68, we get up to 78. That's $10. That's 100 pips. That could be a scalper's daily goal right there, just to fill from here to the white line. Get in, get out. And when I look at my chart right now, there's that white line. See what I mean? So now I have kind of everything mapped out perfectly. So I know if we start breaking out today from there to that white line, that's what I was saying, that 100 pip move right up to there, okay? So now we have this kind of choppy consolidation on the hourly. We got to like continue, maybe let it build. And now I move into, let's see the 15 minutes. Normally I go right into the 5 minutes, but if you're a 15-minute trader, this is what you're seeing. So the 15-minute candles came up bullish at 5 a.m., came back down, back up, all the way down, back up, coming back down. So if you look at the 15-minute candles, what do we see? I see a top right there. Even these body, 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 body. I could draw a line at the 15-minute resistance right there. It came back down, support coming right back up, double top. And see how it's trying to literally break down, but every time it comes down, it's going back up. So we got to see maybe a 15-minute candle closing below here, maybe doing this, and then a 15-minute drop, right? If we're looking at 5 minutes now, this is our 5 minutes, okay? So you can see the big bullish move right there. I can see exactly at 10 after 5, we hit the highest point of the day. It came back down, came back up, lower highs. They pushed it all the way right back down to the green box, and then it came back up to here. So you can see that the 5-minute candles from the highest point of the day, they're starting to put in a lower high up here now. Right here, I'm going to use that red line. See, and still continuing to push down. So, and this is in that, you know, that consolidated zone in here. Maybe we got to continue to watch how this accumulates for the time being and see what we're going to continue to trade with. If we do like a trend line on the 5 minutes starting right here, okay? So if I connect A to B, you know, continuing this, you can see where it kind of broke. Okay, so the trend line was respected there, was respected there. There they just initially broke it, but that daily point of interest, see the yellow line, kind of got it right back up. Then it came again, retested this, broke that trend line, but now that point of control, that green zone, pushed it back up to the highest point of the day. So you see that technically we broke that uptrend, okay? So I could use that as a target if we continue to go up bullish, you know, like right up there. Could hit that hourly resistance, and then we're right back at the bottom of that trend line. But right now we are below this trend line, so I want to see if it's going to continue to break down. What I could do is I could also add some indicators. So I like my SST daily bar to tell me how the daily bar is moving. So you remember this yellow line I was telling you about, this 4,240? This is 50% of this entire red zone. That's why I never moved it to the opening price, because that's why I said I was going to use my daily bar to let me know where the opening price is, right there. So I know when it initially opened, it was bearish at 6 p.m., came down, we made the lowest point of the day, 4,205. We came back to the opening balance, it flipped. We came up to the highest point right there, 10 after 5, and now we've got the daily wick that's being formed on these 5-minute push down, okay? So ultimately, you can see where the big fight is going to be today. It's going to be like maybe at this green zone, maybe a little lower right here at 4,240, or ultimately at the opening balance right around here. But right now, let's add a 9 EMA. We're below the 9 EMA, this green line. Let's add a 200 EMA. And you see our 200 EMA is literally going to start coming up to the opening balance, or maybe this point of control right in here. So if it does break, this might be a better area to maybe buy near the opening balance right here, okay? Okay, how was that analysis, guys? You guys got that? Do you guys have maybe your points of interest, your zones, maybe similar to mine? Put a like on YouTube if you guys like that analysis, if you learned something. So what I could do with this now is I can save all of this for the entire week. Again, just add alerts at critical areas and watch how the 5-minute volume trades at these levels. I delete it every single day for you guys so we can start a new one. But if I wasn't trading with you guys, I would have done this yesterday on Sunday, for gold, for Dow Jones, for NASDAQ, for whatever securities I trade. And all week, I will just trade off of these levels. I will allow the volume to naturally come to me. I don't have to sit and stare at my computer all day. I can go do my things, but I will get notifications. Then when I come there, at least I know that the volume is trading at a higher probable area where there could be bigger buyers or bigger sellers. And then I just, you know, look for my pattern recognition, trade accordingly, okay? Sometimes I take trades when it comes down here. Sometimes I don't, okay? So you got to understand that. But that's how you can go about trading. And that's how you can do it alongside if you've got a busy schedule, if you're working, if you're with the kids, if you're at home, if you're, whatever you're doing, right? You got to kind of, you know, trade alongside with your busy lifestyle. It's hard to change your lifestyle and make it with trading, okay? So what I do is I go on with my life, what I got to do, and then I fit trading into my life, right? I don't trade, I don't change my life for trading. And ever since I started doing this, guys, I'm telling you, it taught me how to be more disciplined. It taught me how to be more patient. And I've noticed that my account has really started to grow since I started doing this. And I didn't start this last week or last year. I've been doing this for over 15, 20 years now. Okay, and I'm telling you, I still do it. So it's a strategy that's been tested and it works over time. You can test these points of control for yourself. and you can test 50% and cut candles and back test this stuff. I'm telling you, it works. Why? Because it is just how transactions work. It's just how an auction works. That's where it's fair value for everybody. At the 50% of anything, if it's a bearish candle or a bullish candle, it's fair value for a buyer and it's fair value for a seller. Same analogy as Black Friday. If a TV is $1,000 a week before Black Friday and it's $2,000, let's say, I don't know, a week after. If a TV, sorry, don't even use the Black Friday analogy. Just use, if a TV is $1,000 today and it's $2,000 tomorrow, what would be an appropriate price to buy that TV? I would love to buy it at the lowest price of $1,000, but the Best Buy probably doesn't want to sell it to me for $1,000 because they got to make some money. So, and I don't, as a consumer, I don't want to pay the highest price at $2,000. That's good for Best Buy, but it's not good for me. So what price tag is fair for me, the buyer, and fair for the seller at the electronics store? Probably $1,500. You add 1,000 plus 2,000, you get 3,000. Cut it in half, divide it by 2, you get 1,500. 1,500 is right in the middle. It's kind of that sweet point. So it's fair for me. Yes, I'm not getting the lowest price, but I'm not paying the highest. So 1,500. And same with the seller. They're not getting the highest price, but they're not getting the lowest. So it's fair. It's a fair transaction, fair value. Okay? So that's how you got it. That's how it works in our everyday life. That's how it works in an auction. We're just like buying a TV, but we're buying gold. So we've got to find that nice, sweet spot. Right now, we could maybe look to engage in a buy because we're transacting back down into this green zone. But I noticed that it's creating a new lower low from that wick. So I know that sellers are still pushing it down and we've got lower highs coming from the top. So yes, it could be a time to right now just initiate a buy and go in, but still on the 5 minutes, you got to know that you're still countering a bearish trend coming down. So maybe I got to see like a bullish candle, maybe engulf. Maybe I got to see something develop here. I could start having the bias that I'm getting ready to buy, but I can still see it's opened and still pushing down. What I could do on these 5 minutes is also cut this bar in half right there. Have the buyers proven to me? And look at the number, 4,249.85 cents. It's like pennies off of 4,250, that psychological number. And if the buyers cannot, prove to me that they can close it above there, then this might still be resistance that sellers could still push it down deeper down into here. And then obviously it would be better to possibly buy here or here or here. So now I see that the buyers are stepping in right now. Okay. But again, let's see what happens up here. Some of you guys might be in a buy. Some of you guys might be selling. Some of you guys might be on the sidelines. Okay. It's 7:15 right now, so we can watch gold till about 7:30. And then what I'll do is either NASDAQ or US30. We'll do a top down on that one as well. We'll get one of those out of the way. Then we'll come back to gold and we'll watch gold going into 8 a.m. and COMEX. And then we'll stick with gold till about close to 8:50 till 9 a.m. And then at least we have NASDAQ or US30 done. And then I can do one more top down on the other one, US30 or NASDAQ. And then we'll move into Wall Street. Bands? Charting zones change your life for real. It's guys, I'm telling you, it's for real. You guys know, you guys are a testimony, right? I can say for myself, since I started doing this, it's changed my life. But some people don't believe that, so that's fine. So you guys doing this, you guys are my own testimony. You guys doing this, you will see. You will see for yourself. And if it's working, then you will know for yourself. I can't speak for you, but I know if you're following this, if it's working for me, it's got to be working for you. I know that for facts because I'm not making this stuff up. If I was making this stuff up, you guys would be telling me, Ron, you're full of shit every day. I'm doing this and it doesn't work. And then I would be exposed and you guys would call me a scammer and this and that. But I'm telling you, this does work. It's auction theory. It does work. The only thing that separates traders too, if you do this, that doesn't mean you're going to be a successful trader. You also have to learn how to manage your risk, right? That's another thing. So I tell traders all the time, they might be amazing at doing a top-down analysis. They might be better than me at identifying zones and points of control, but they're still losing. Then I'm gonna say to them, well, how are you still losing when you've got better technical analysis than me and better charting than me? And then when we start looking into it, I'm going to start to see that they're risking way too much. See, again, we've got spamming. Afag, what is your name here? A million times. This is what I cannot stand. So unfortunately, I got to be the moderator here. I got to be the asshole and put you in timeout here. Because I cannot read one thing that anyone is writing in here, because you're spamming silly shit. Holy fuck, and it doesn't stop. I don't know if it's a human or a robot, but if you're a human, wow, you are fucking too much. Sorry, guys. I can't even watch this bullish candle being printed because I got to take care of some bullshit over here. I can't even get in. Okay, so now what you got to do is kind of follow this bullish candle and see where it closes. Maybe someone bought, but do you understand like where you bought at? And look at the size of the bar. Like that bar right there is almost 60 pips just from tapping into that top of that green zone. I never bought, but if one of you guys did, wow. Okay. So you can see like how strong this green zone is still holding up. Why do I call them pips? Because I'm trading Forex right now. Pips. This is Forex. Don't worry what they're called. If you're trading futures, you call them ticks, you call them points. It doesn't matter, okay? You just trade what you are trading. I'm trading Forex right now. So Forex is pips. I can turn these into points. 60 pips is 600 points. If you want to move them into ticks, you move them into ticks. You should know this is your language, not my language. I'm not trading futures right now. Again, I trust that you guys know the language of trading, okay? I think that we're at the stage where we don't have to sit and break down what are pips and points and ticks. That's just basic shit that you guys should understand. It's like when you go to the grocery store, you're either dealing in dollars, like pennies, dimes, nickels. You got to know these things, okay? It's not my job to teach you this. These are the basics. That's where you can go on internet and just do a basics. Just go on Google and say, what are pips? What are ticks? Learn what you're trading, okay? Because if you don't know that, how are you going to start to learn more advanced stuff in trading? Okay, so now what we got to do is kind of cut that big bullish candle in half. Okay, because if it's coming down, I want to see, is it going to respect the buyers coming out of that big bullish candle, or are the sellers going to continue to close it back below there and push one more time? Then maybe I'm looking to buy a second bottom down into here. Okay. Zoom, do you guys have any questions? Anything right now? Okay, see how that big bearish candle is coming right back down? So if you were in that buy, like I said, it went up 60 pips. If you didn't do anything, sometimes this happens. But then you got to understand, did you do anything? Did you bring a stop loss to break even? Did you scale out? If you didn't, unfortunately, this happens. Sometimes when I go into buys, this happens, right? That's why now you can see it's kind of still barcoding. Bullish, bearish, still accumulating in here. Okay, so maybe we got to continue to watch what's going on. Someone's asking, am I okay? You look like you slept 10 minutes per day. Yeah, I sleep 10 minutes per day. I hustle. I got to work. I got to come on the charts all day, all night. I got a wife. I got kids. I grind. That's the eyes of a grinder right there. I don't get my beauty sleep like some of you guys sleeping for 8 to 10 hours a day. I'm sorry. I sleep 3-4 hours maximum. When you do that, your eyes are going to look like mine. Plus, I smoke a lot of weed. So that's probably why my eyes look like this too. So, but I appreciate your concerns. When you see someone that's working hard, that's how these eyes are going to look. When you see someone that's real pretty, you know that they're getting some nice beauty sleep. That's not me. When you work as hard as me, your eyes are going to look like this too. If your eyes don't look like this, then you're not working hard enough. That's simple. Okay, so look at now. Are we going to start to accumulate right here? See how it's still, okay? We got a bearish bar, that big bullish one that broke out, but that bearish one came right back in, and there's another bullish bar coming right here, okay? So, again, this is good volume. You can trade this, but it's not ideal. We're just barcoding. So these are single bars. If you're buying, you got to know how to pip and dip out of that. If you're selling, you got to know how to pip and dip. If you're back in a buy, you got to know how to pip and dip out of that. Okay, until they start accumulating more and more and more. See if you want to kind of box this in right here. These are big body candles. These are minimum 50 pip 5-minute candles. Look at from the bottom to the up, 50, 55, 60 pip candles. These are not Mickey Mouse candles, okay? And these candles, if you're over leveraged, I guarantee you, if it's going against you, you're going to start panicking. So you got to also look. These are 60 pip candles now. These are not small candles. Kafir, you don't work hard, but you work smart. No such thing as work. You got to work hard. I'm sorry. I work very smart too, but sometimes when you're working smart, you got to patiently wait at a computer, 4 hours, 6 hours, 8 hours for a setup. That's working smart. That's trading smart, but it's still working fucking hard. Breaking your back, sitting at a chair all day, staring at a screen. If you think that that's working smart, then I don't know. To me, it's hard work. It's worse than working physical labor. Okay, so big bullish candle coming right back up. Let's see if it can close above there. Some of you guys are trading this. Fantastic. If you guys are, great. But I'm not engaging in this as of yet. Take a look at your spreads. We're going into 7:30 now. Okay, so we've got a new 30-minute candle coming up. So I'm going to wait till 7:30 now. We're only a minute and 20 seconds away. We're going to get a new 30-minute candle. Maybe if we want to clean up all of this 5 minutes, we look at our 30 minutes. Look at the 30 minutes now. It tells us a different story. Okay? Look at, like, starting from 5:30, it came down right there, close. 6 a.m., this is pre-New York, came down, back up, closed right there. Look at 6:30, came up, came down, closed right there. This is this 30-minute candle, came up, came back down, right there. So, you know, even the 30-minute candles are kind of just consolidating in here. Not the greatest volume to trade on the 30 minutes. Yeah, they're nice bars on the 5 minutes, but still the 5 minutes are not going anywhere as well. They were just inside here. It came down, back up, came down, back up. It can continue, yes, to break and test up here, or maybe the daily high, or it's going to come back down with some selling pressure back down into here. I'll put our commodities Discord on the left side over here, see what's going on in there. If you guys want to share anything in there, you're welcome to. Welcome, guys. Okay, Borix is in there, Justin's in there. G, welcome. See, already you guys did really well. Good job, guys. I'll go back to the news as we get closer to 8 a.m. So you got to understand right now in this situation, there is buyers, they're buying, but it's not breaking out to create any highs. There's also sellers, but it's not breaking down into here. So the market is still accumulating with both buyers and sellers. They're nice moves, okay? So me, if I was in this, you know, if I was a buyer, I would be getting frustrated that it's not breaking above here. And also if I was a seller, I'd be getting frustrated that it's not breaking below here. But I'm neither in a buy or a sell. I'm on the sideline. So I'm continuing to watch what's happening, who is accumulating more. It's a new 30-minute candle now coming into the market. Again, if these buyers and sellers are in the trade, they have to have at least above a 60, 70, 80 pip stop loss in order to continue to stay in this trade, right? So otherwise, they're going to get stopped out on each one of these candles, okay? And you could imagine if you start to over leverage, how that could impact your trading inside here, okay? So there's nothing wrong with continuing to wait. I know some of you guys got ants in your pants saying, Ron, why are we buying? Are we selling? Are we buying? Are we selling? I don't know. Maybe you are. I'm still here watching. Wow, Borix, 14% today. That's awesome. Yeah, everyone's going to have some of those days where you get 10%, 15%. You know, they're nice days to have. You could be done your entire week in one day. It happens, guys. When the volume cooperates, you know what you're looking for. You got the rhythm. You know, I always say when you hit your daily goal, be done for the day. But if you got the momentum, you got the rhythm. I always say this too, like Michael Jordan. You know, when he's hot, they don't bench him and say that's enough. They let him keep going. That's how he can score 60 points, 70, 80 points a game, right? You got to feed the hot hand. In trading, it's the same too. If you're at your 1%, 1.5% goal for the day, I always say you can continue to trade as long as you lock in at least 1%. Trade with that 0.5%, maybe you make 2%. Lock in, like have a trailing stop loss on your daily wins too. So then at least lock in a certain amount if you want to continue trading. If you do come back, at least you get stopped out, but you've got your daily goal or above. And some days you can drag it to be 2%, 3%, some days 5%, maybe a 10% day. That's trading in the zone, exactly. When you're hot and you're feeling it, the worst thing you can do in a sports game is take the ball out of that player's hands. And the worst thing you can do in trading is a trader that's hot and feeling the markets and maybe on a win streak of 3 trades in a row, 5 trades in a row, 10 trades, is say, just stop trading. No. You got to also understand, lock in some profits, but continue to trade. You got the momentum. You got the hot hand. It's the same with a sports analogy. If you see behind me, I got the Michael Jordan jersey in there. Okay? You guys all know him. When he's hot, imagine a coach telling him to stop shooting and pass the ball when he has hit 3-5 shots in a row. The coach will probably be fired. So you got to feed that hot hand. Akira, can you use the scalper strategy in Bitcoin? You can use it in any security, anything. As long as there's candlesticks and you're following them, again, it's all auction theory. Bitcoin is in an auction as well. It works for anything. Currencies, commodities, indices, stocks, options, bonds, anything. ETFs, whatever. The UK and US are poised to agree to a 0 tariffs deal on pharmaceuticals. That's coming from the Times. Ukraine seeks a 1 billion euros more to buy US weapons by year end. So that's in the news right now. I haven't taken a trade today yet. Nope, not yet. Okay, so again, it's coming right up to this point here, but this 4,254 area, there's some resistance up here. You see how there's no blue volume closing above here yet? So sellers are still here pushing this thing down. So it's still in this accumulation. It does have higher lows, so there is some buyers, but they're not closing it with conviction. They're not closing it above here with kind of authority. So anytime like a seller senses weakness on a buyer, then more offers might come in the market, and that's where traditionally you might see another black candle coming back down. Okay, that's what we see right now. But when it comes down, it might get a higher low and come back up and close strong. That might be our first candle closing above here. And if that's the case, maybe we can make this a resistance area into a supporting area to take us all the way back up to this resistance right here, then ultimately maybe the highest point of the day right there. I will be doing US30 in like 5 more minutes, okay, so we can get that out of the way, and then we'll just have NASDAQ that we'll do around 9 a.m. Okay, 3 charts today. Gold we've already done. We'll work on US30, and then we can also move on to NASDAQ as well. Okay, so now what we watch for is this could be an impulse break right now, or it could be also a fake out. 2.5 minutes are left on the candle. Okay, so you can see it is now pushing above. It's a hammer candle where it came down, higher low, came back, and now it could push out. So this could be a candle. If you are trading, these are those impulse candles. If you're already in a buy, you want this thing to impulsively break above here. Okay, and if you're selling, you kind of want to see this thing get rejected back down. If I'm not in a trade, what do? Do I just buy right now? Or should I wait for this thing to close? I'm going to personally wait for it to close. And yes, I understand I might miss out on an impulse break. But how many times, if you've taken impulse trades, do they get reversed and come back down and you're in drawdown? So it's one of those situations that you're going to have to learn how to trade these things. Okay, it's either going to come with intuition. You see what's going on, is it building, and you're in. That could be great if you want to do it. It could be one of those bars that just impulsively break and get away. If that's the case, I follow where it closes, then I might have to look for a pullback buy again at this area, which was resistance. This might be the first bar that closes with volume above. Then I naturally have to wait for maybe a pullback to come back down here and buy. If that's going to turn to be the retest area, to buy it to fill back up this candle and maybe get up to there. Okay, but I've made up my mind. I'm not buying it on impulse, so I have to wait till this thing physically closes in 1 minute. Will it pull back on the next bar? Probably not. Okay. Do I got to figure out where it will close relative to the high? Can I cut it in half? Will it be a shallow pullback and continue driving? It could be momentum continuing to trade off of this volume, and there is no pullback. The pullback might be 5, 10, 15, 20 minutes, 30 minutes later, right? It's not guaranteed that it's always going to be the next candle that's coming down for retest. You have to understand that. That's what someone asked me, Ron, is it always a retest the next candle? No. It might not even come back down to retest for the next hour. Who knows, right? There's no guarantees, guys. I can't say that if a candle closes above, 100% is going to be guaranteed to retest the next bar. You can't say that. Okay, but is this the first bar that's closed above this area? Yes, in a long time. Okay, so now this area, right? If it comes back down, maybe I'm looking to buy relative to this area, but it might not come back down right away. Okay, now let's see. Now it's coming back down to retest that location. So this is the first initial retest, where this was the first bar that closed above. Now it's retesting. See where it got a wick, came back up and went back down? Is it actually holding this? It's coming, is it coming down deeper? Is this going to be a fake out where it's a bearish engulfing candle closing back below here, and then it's faked out those buyers, and then it wants to continue to drive down? Okay, unfortunately, you might have to wait another 4 minutes till until that bar closes, but right now it's still holding support at this retest level. I could also go into the single 1 minute bars and visually look what's going on the 1 minutes, or I just wait for this thing, okay? So far, it's transacting at this previous resistance area and seeing if the buyers are here supporting this move. Okay, so they're there. It's got support. It's got a wick. Now what we need is the candle to flip and continue to drive. So I could buy the flip of the candle, or I could wait maybe for it to come back down and again buy maybe deeper, or it could push that and come even deeper down. I'm cautious this could be a bearish engulfing candle, and I don't want to kind of buy if it's a fake out and then it continues to drive back down. So that's why I got to watch. I got to be careful. Is this a fake out bar? So it came down again, retested this location. Looks like that's the third or fourth retest of that location. So every time it comes down, it is picking up some pending buyers. But there's still this bearish volume on this candle that still continues to hold and still push down. Okay, now we have half the candle is exhausted. So we have another 2.5 minutes to go. This is kind of the halftime show of the basketball game. This is the halftime show of this candle. So we saw the first half. This is now the second half. And it looks like it's a bearish engulfing candle coming deeper down in here. So it retested 4 times, but remember, it couldn't break. That's why it was a bearish candle. It was holding that volume. That's why I was hesitant on buying it. And now it's coming down deeper. If it closes back below here, then that's a clear fake out. Then sellers faked that out, and they could continue to push this thing further down into here. Okay, so you see how sometimes a candle can close above, it can retest, and it doesn't automatically give you the right to just buy it because there's a retest. You still got to watch what's going on. When it opened, it didn't create a new higher high. I noticed that on that wick. It's a low wick and continue push down. That's why I refused to buy it. I was looking to buy, but I never pulled the trigger. Okay, so if you bought that impulse candle, again, I'm going to say, did you do anything? Did you grab some pips? Or are you holding in drawdown now? Okay, So you see, this shit happens. Okay, I'm not doing it to say anything to anybody, but I'm just letting you know. On impulse candles, like that impulsively broke for about 25 pips, came down, closed, and now it's pushing down all the way down here. And now it's closing in 60 seconds. So will buyers bring it right back up, or are sellers going to continue to close it? And then I see that the sellers now have an engulfing candle over that and have completely, like, basically swallowed that bullish volume. And maybe next bar will be another bearish bar, or will buyers bring it back up, and we're going to start to consolidate up here, and barcode blue, black, blue, and then get that blue move continuing to drive to the highest point of the day, or we're going to sell back down into here. So the closing price, look at where it's trading, right at that opening balance right there. 30 seconds to go. Does this setup or change your mindset, like your decision from buying or selling, or are you not concerned about this? Does this change anything? If you're a buyer, does this change your buying perspective? If you're a seller, does this change anything? Or are you still neutral? This doesn't really affect you. Okay, so it closed bearish, ignited, right? So if it comes up to retest, it could come up retest that 50% up there, okay? Okay, so it's still bearish. Okay, I'm going to go in a sell. I'm going to take a sell, and I'm going to place my stop loss. I could go right above that bearish candle, right above the high of that bearish candle. I could place my stop loss. I'm going to just place my stop loss just a little higher above that blue candle right there. I'm not going to the highest point up there. I feel like that's good enough. And I want to see if we can break this low and transact down to 50% of this green box to this white line. If it can break, I'm targeting the bottom of the green zone, okay? So the reason why I'm entering a sell is because of that bearish fake out, and I want to go in with the momentum selling down, okay? So it is in the money right now for 20 pips. If I wanted to scalp just like that, in and out, I could have entered, zero drawdown, got my 20 pips and out. If it comes down to the top of that green box, it's about 30 plus pips. I'm going to measure it right down to fill those equal bottom lows, could be close to 40 pips down in there, okay? So I haven't done anything yet. I'm still holding this trade. It did push down. Now it's coming back up with those buyers down in here. So now I got to see, can the sellers continue to offer and bring this thing down? Can they close it below here to get that leg continuing to come down, okay? So I didn't pip and dip out of there. My intention was not just to sell and just get 20 pips. If that's the situation, I'll give you guys heads up and tell you guys, I'm just looking to scalp for 20 pips in and out. That's it, right? I didn't do it in this situation, but maybe some of you guys are more micro scalpers, and you do what you got to do, okay? So this candle still has 3 more minutes to go. When it came down there, it found some buyers, and it's coming right back up, okay? So now we got to continue to watch. We still have some bearish volume still left on the head of this candle. They are offering, you know, like right where I bought in. So there is still some offers. Continue to try to push this thing down. This candle could flip bullish, turn blue, and start to transact back up to test 50% of the black candle, or maybe the high of where that candle opened. That's why my stop loss is just above that candle, because if it reverses, I no longer want to be in this trade, because it could be targeting this resistance and basically the highest point of the day, and I no longer want to be in that sell. So this is a big support level. If the sellers can break down in here, that's where we could get that further drop down. But Still holding tough in here. And we're at this psychological level, 42.50, 42.50. Okay, now we're at about 60 more seconds to go into the close. Sellers still have the upper hand. They're still holding the majority of the volume. There was those significant push-ups, but you can see we never broke. Sellers were offering kind of right where I entered, and they're pushing right back down to the lowest point of the wick. Maybe we can create a new lower low and get deeper down into here. Maybe it can close strong like this. Maybe we can carry the momentum into the next bar, maybe an ignited bearish bar continuing to drop. If it closes like this, we're going to cut this bearish bar in half, figure out where 50% of it is, and see if we can continue to push this thing down and trail our profits down with it. Okay, so you see how we came right back down to our lowest point and we broke even lower. So sellers are in control of this bar. Okay. So measuring that move, guys, right there. There's 30 pips right down to the bottom. If it fills those two equal bottom wicks, that's 40 pips. Okay, this is when you can start to reduce your risk if you like. However, we can wait for the whole bar to close in 10 seconds. Okay, get ready to cut this thing because it could open bullish, ignited right away and come right back up because we're right at this green zone. Okay. However, if we open bearish ignited, we have a short wick, we could continue pop. So right there, it opened bearish. Cutting it in half right there. If it comes up, I want to know where my point of control is. We got a nice bearish bar. So let's see if we can now just fill those wicks, get down to about 40 pips, and maybe drop down to that white line. That would be about 50 plus pips if we can get it down there. Ultimately, risk should be reduced and maybe start to scale out a little bit or hold the trade. But we still are seeing that we're in this buying area right in here. And this candle is a small doji that's blue. Hasn't really came up yet. So sellers are still there offering right at this price. I hope it's a shallow pullback, but might not be. Has anyone done anything so far? Wow, PC, you secured 70, stop loss to break even, half off. Good job, guys. Okay. Duke, you took 90% out, fully closed. Okay, I'm just seeing what's going on here. Okay, still hasn't retested 50%. Even if it does test 50%, I'm still in the money. So I'm still holding this thing. I like this doji candle because I know it's low volume. It's holding still near the opening balance. So all I need is kind of a big seller just to redistribute right through here. And then get those 50, 60 points down, pips, whatever you call them, right through here. Okay. Target is obviously this white line, but you know, to cut through this green zone would be really nice if we can get it. And the reason why I took that sell was because of that setup right there. That fake out, that bearish engulfing candle opened right away, got in the sell. Okay, so now you can see the blue candle is coming back up to retest. It got a wick right there, and it's getting rejected. Okay, so that's that point of interest, cutting it in half, point of control. Can we reject that move, get it back down here, and continue pushing down? That's a perfect retest candle. Okay, we've controlled it up there. Now all we got to do is bid down the lowest point and continue pushing this thing down. But you got to understand, we're trading in that big bullish point of control zone on the hourly here. Like I know that this white line is my 4-hour hourly support line. But if we can get some black volume closing below here, see how I have wick, a wick, a wick, and another wick? Okay, that could start a next bullish leg coming back up. But if we can close with some black volume below here, that could signal that we have more room to continue to push down. 2 more minutes to go in this candle, and you can see how that bullish volume is still holding at this 4,248 area. So it's not easy to break this yet. But there it came up again. Offers were there, pushing it back down. We got a bearish pin bar. Hopefully we can turn this into a shooting star candle. Again, get to bid the lowest point of the candle and continue to push our way down. And then hopefully maybe close below there as well. Okay, this is a big fight between buyers and sellers right here now. And we're closing in a minute and 10 seconds. See the volatility now? See how quickly it came down bearish, flipped back up bullish. Okay, so now we got a lot of volatility going in, and we're close to 8 a.m. as well. We're about 6 minutes away from 8 a.m. Guys, I'm not even looking in the YouTube chat right now because I see some of you guys are spamming. So if you guys have good questions, I'll entertain them. But if you guys are spamming silly shit, oh, I see one of our moderators took it out, so that's good. It's hard to see what you guys are saying, especially if you're spamming when we're in a trade and we're at a real critical location. Right here, we got our shooting star with 20 seconds to go. So that's the break. We created our new lower low. Now we got to physically watch how the volume will close. Here we go, guys. Okay. It's a beautiful candle we got. But now let's see if we can redistribute down through here because we're driving in a green zone where it's hourly support in here. Okay, there was the close, short wick, open blue. If we can quickly, yes, quick rejection, perfect. Now let's see if we can just continue to drive it down to this white line. That's 50 plus pips. And then if it can break, you guys can count 60 and then maybe 75 to the bottom, okay? But as soon as it reaches this location, I know we're reaching hourly support. Like, look at what we're coming down into, okay? So we got first body closing below here. So if it has to come back up, maybe this will be resistance. But we got maybe a candle we could push down with going into our new hour, okay? And then right down in here is 50 points, 50 pips, 500. Okay, right there. I'm going to a break even now, up 50 pips, breaking, okay? So I'm at a break even now, no risk. I'm taking out 80% right there. 80% is out. At the bottom of that black candle, I just took out 80% down there for 60 plus pips. So I got 20% running now. Going into 8 a.m., I took out 60 pips, 80% is out. You guys understand that? All because of that fake out right there. That's why I took that sell on that bar. Remember I was waiting patiently for that retest? I saw it come up, but the bears controlled that. Fake out, bearish engulfing. Next bar came up. As soon as it broke that wick, I got in my sell. Stop loss, I placed it above that candle. I noticed zero drawdown and it started breaking down. Cut it in half. We came up, back down, shooting stars, short wick, pop. As soon as it came down to 50 pips, I went down to a break even. And when it broke down for that 60 pips, I took out 80%. That's a full breakdown of a live trade for you guys. Okay? And if it can continue to drop all the way down, the total move to clear that green box is 75 pips. Again, I'm still in. I got 20% invested, so I'm still watching this volume. Okay? Put W's in the chat, guys. I saw someone was spamming. I'm going the wrong side of the trade. You know, there's going to be buyers, there's going to be sellers. The person in the chat, you provided some liquidity to us. We thank you for your input, but you were on the wrong side of this call. So I know that traders can be on the wrong side of trading as well as I can be, but I'm not arrogant to say, oh, you're wrong, and shit like that. So I can be like that, but I'm not an asshole like that. But you provided the liquidity for the markets to drop down. You're buying. You provided my daily goal. Thank you. You don't got to be an asshole about it. I understand trading is both ways. Someone will be buying, someone will be selling. Yes, and buyers can step right back in, but that's why I understand. I take a majority of my trade out in this green box. You guys got to understand why I do that, because I respect that there's buyers here. And this could come all the way right back up and be a big bullish leg coming right through here, okay? But when I hit 50, 60 pips, I want to secure. That's the majority of my daily goal right there. Good job, guys. Okay, but let's follow the close of this, okay? So worst case scenario, I'm saying for myself personally, the worst thing that can happen to me is my 20% that I have left hits a break even. Just the 20% that I have left is a break even. I'm okay with that. But you notice when that was coming down there, I closed out 80% down there at the bottom of the green zone. And sometimes, yes, it will go down further, but sometimes it will come right back up and go right up to there. So I don't play a would've, should've, could've game when I trade. I trade according to these lines and these zones. You see, when it came down to the white line, I went to a break even. When it broke, that redistribution, I took out 60% or 80% at those 60 pips and then went to break even. That's it. That's how that trade goes. That's how it goes. If it continues to break down further, fantastic. I have 20% still running to see if it will continue to go down. Now we're going into 8 a.m. right now in the next 30 seconds. So we could have one of those hourly switch ups where the market switches right back up. Okay. But we could also have one of those hourly moves that continue to push down. We got to watch now where the volume will close. Will it close below this hourly white line? Then we got 5-minute volume. This white line could turn into resistance to continue push down. See the fight right here? Chris, you were in a loss and back to break even on your account. Congrats. That's awesome. Review your loss, Chris, if you can. If you got a moment, look it over, see what happens. Anytime you go to break even, it's good review time. Okay, here we go. New candle, closed. I didn't get the close black volume below the white line that I wanted. It opened bearish ignite and just dropped and flipped. So you're going to see some type of volatility now that we're in 8 a.m. And we're 20 minutes away from COMEX. Okay, and you can see how bullish it is. It's returning right now at this white hourly supporting line, 4,246. Okay, so it came back up. Now it's retesting this. They pushed it back down. Okay, so I'm still in this with my 20% running, but you got to see, you got to understand that a new hourly candle brings in volatility. Guys, we have almost 500 viewers on YouTube. Please leave us a like. Subscribe to the channel if you haven't already. You know, if you guys enjoy live trading, live education, live analysis, this is probably a good time to subscribe to the channel. Too tight stops, Chris? Simple fix. Just decrease your position size just a little bit, increase your stop loss just a little bit, and that could maybe take those stop losses to profitable trades as long as you're in the right direction of the move. Just a simple little tweak like that works wonders. Can you take a buy? Absolutely. You can buy, you can sell, you can do whatever you want. Okay? Again, I'm not your financial advisor here. You can buy, sell, do nothing, go for a coffee, go to the washroom, go do whatever you want. You're an adult. You don't need to ask me. If you listen to what I was saying, if you were buying, you're buying at a supporting zone, you're buying at a new candle opening at 8 a.m., and it could be a good time to maybe potentially buy. But I don't want to hedge trade where I'm already in a sell and just continue in a buy. Okay? I want to either see what happens here. Either I'll lose my 20% remaining, close out the trade, then I can refocus. Because right now, my mind is still in a sell. But you can do whatever you want to do. Can I describe a fake out again? There's a clear indication right there. You see what I mean? The volume closed above, and then when it came to retest, we saw that candle had 4 wicks right there when it was retesting, but that candle when it opened never broke that high, and then you see it's a big bearish engulfing candle. So that's a fake out. That's a clear definition of a fake out right there. And that's why I took that sell down to get my 60 pips. Right there, that's it. You see, I got stopped out at my 20% break even now. So I look back now. Was it a good idea that I took out 80% down there? Absolutely. You know, on those days where it's woulda, shoulda, coulda done this, sometimes I take out and it keeps going down. Well, look at this situation. If I never took out, now it would have pissed away 60 pips in profit and came back to my break even. If I didn't have a break even, it could be technically coming up to where my stop loss is. And then I'm exposed to the market, and then it could be a big momentum change in trading where you take a profitable trade, you're in profit, and now you get stopped out. So there's an example of a fake out getting in. Where as soon as, guys, it's right there for you. If you want, rewind the call for you. You'll know my mindset, why I went in and sold. You'll know why I waited for that candle to close. You'll know why I went in right there. You'll know why I placed my stop loss there. You'll know why when we hit that white line, why I took my stop loss to break even. You'll know why when I broke there, I took out 80%. And you'll know why right now where that candle came, this big bullish candle, it's 8 a.m., momentum, hourly reversal, right down to this hourly supporting line. Okay, you got to understand, trading goes both ways. When you sell, I'm selling down to where the buyers are and I want to close my position. That's how I make money. It's sell high and then you buy, to close your position, you got to buy it back lower where the buyers are. And then you see now at 8 a.m. the hourly reverses, and now buyers are buying at a discounted rate, right at a solid area. And look at this big crazy bullish candle that's coming right back up. Okay, so again, it was trading right back in the zone. Yes, we got in a nice little sell, but now it's coming right back up. So the same situation up here. If gold buyers get it back above here and close it above, again, will it retest this and continue to drive to this red line and quite possibly the highest point of the day right there? Okay, look at it. It's bullish ignited, short wick, and continuing to drive. Okay, so that's why you got to be kind of in and out of these markets if you're a scalper or an intraday trader. Otherwise, shit like this can happen. Okay, guys, it's 8:05. We're 15 minutes away from COMEX. I kind of wanted to do US30 quickly and come back to gold in a moment, okay? So I'm just going to do US30 quickly. I said I was going to do this earlier, but we got into a trade. So I'm going on a daily on US30. Kind of want to break this down a little bit, where we're at, and I'm going to go a little faster. So that's our all-time high here on US30. And then we'll do NASDAQ after 9 a.m., okay? So right here, this zone on the all-time high, similar with what we did with gold, that's where we have all the sellers. We were close to it on Friday, and now we're coming back down with a daily bearish bar, but we still have 9 hours to go, okay? Do we have good supporting area on right here? You can see there was good support right there. Do we have kind of a supporting block down in here? Right in here? We got good supporting block, okay? So this is where we are moving now on the daily on US30. It came up, retracement back down, all-time high, big push down, came back down to this bottom where you had buyers there, buyers there, buyers there. It came right back up. So you see now where we're consolidating right near the all-time high, maybe has a leg to push back down. If we do, what am I focused on? I want to look at this daily pivot right here on US30. This is where these daily candles came down, back up, came down, back up, closed right there. Big drop, closed back above there, and then we started our all-time high. There's where it closed below. It came up, kind of retested that, pushed down. There's where it closed above. So if it ever comes back down to this yellow line, 47,000 on the dot might be a good buying opportunity. Is there a point of control below us on that bullish candle that closed above? There is. Grab your fib tool, opening price, closing price real quick. 50% in your zone. You can find all of that right there. Stretch it into the future, and better, you can buy at that yellow line, but a better line to buy would be inside this zone. Okay, so now let's just follow where we've been moving. Last week was in an uptrend. Tuesday, higher high, higher low. Wednesday, higher high, higher low. Thursday, you guys know there was American Thanksgiving. Friday, markets closed early, but there was some bullish move. So we opened today right now. Did we clear the high? No. Okay, see where we opened? We came up, we made a high already, and it didn't even take out Friday's high. So technically, there is a lower high on US30 and a big bearish candle coming down, coming down, coming down. And notice where our bottom is. It's kind of right at our supporting area on the daily. Right here, there's a body here. This 47,425 area is still holding. So we got a little bit of a wick. If we come back down bearish and break our low and drop further, right into 50% of that bullish candle on Wednesday. If you can't guess where 50% is, grab your fib tool, open, close. Right there exactly is 50%. Yellow line. That would be my next target if it comes down there. I got to look to see if the buyers will be here. So if I'm selling today, just like the 5 minutes, if I'm selling down to 47,300 on the dot, I got to know that buyers could step in there and come back up. If it loses that, then we're coming down to the opening and closing balance of Tuesday and Wednesday of last week, right there, 47,140. Okay. If we continue to come up, notice how the daily candles now are barcoding. Bullish, bearish. It might do what those 5 minute candles were doing as well. Okay. Now if we go to the 4 hour, there was no volume here. Okay, Wednesday, you know that the markets pumped, and then over here going into Thursday, the volume died off. It was American Thanksgiving, not a great day to be trading. That's when you should have took a day off. But if you traded on the Friday morning, and right into the early close of the day, it came up, and then Sunday pushing down. Look at the 4 hour candles now. So they came all the way down, and they could be building their way back up. But this big 4 hour candle was opening balance. Again, if I want to put a white line so I know where the point of control of that 4 hour candle is, it's right there, white line. Okay, so you guys know I traded to the white line on gold. That's what that white line represents. 47,605 is 50% of that big opening balance, that big bearish ignited candle coming down and closing. So if we come all the way back up, it could be trading into, this is a 4 hour bearish point of control today, right there. We got to know that there's some sellers above us protecting that all-time high. Okay, so right now we're not getting nice 4 hour candles, not looking good. This was Europe right here. This is the New York one with less than 2 hours to go. If we go on the hourly, even hourly looks horrible right now. Okay, so we had the big push on Friday, 9 a.m., 10 a.m. There's 11, there's noon. Then the markets closed early on Friday. There's 1, 2, that was the Sunday open, 6. There's 7 p.m. There's futures, 8, 9, 10, 11. There's midnight, 1 a.m., 2 a.m. There's London. London was bullish. 4 a.m. was bearish. 5 a.m. came up bullish, but closed back down there. Then we were up bullish. So you can see right now, we're in an hourly consolidated range. If these were 5 minute bars, I would not be trading these. I would be trapping them and continuing to wait. I can see buyers are buying, sellers are selling. Buyers were buying, sellers sold it. Buyers were buying, sellers were selling. So we're still in this flag that's close to the lowest point of the day, but it's making a higher low, higher low, higher low off of it. So if I get some volume closing above here, we could push up to this 4 hour point of control. It could come right up there and sell right back down. However, it could just be flagging right here and continue to sell off today. Okay, so hourly is not doing much on US30 right now. And then if I look on the 5 minutes, okay, we hit the highest point of the day right there, midnight. It dropped, came back. Look at multi-retest right in here, and then continued to drop down. We've retested the bottom of the day right there, midnight, 2 a.m. There's London. And this is how these 5 minute candles are trading on US30. Right now, not the greatest, okay? It's just, if you want to trade from here to there, you could be in a buy up to there. You could sell it back down. You could be buying, selling. So you're in that hourly range in this box. You can trade in there, or you just continue to wait. If we add our daily bar indicator, we know that it opened right there. It initially was bullish right at the open, then came down very bearish, bearish, bearish. We made the lowest point of the day right over here, and now it's coming right back up. But we still have this big bearish candle that could continue going into Wall Street and continue selling off and taking out today's daily low and dropping down. So if we just add 9 EMA, we're right at it, and the 200 EMA, we're right at it. I don't like trading when the 9 and 200 are kind of together, because then it's too choppy. So that's what we got on US30. We'll keep an eye on this as we get closer to 9 a.m. And then I will do NASDAQ in just a moment. But we'll go back to gold and watch the COMEX market open. Okay, so let's go back to gold over here. Okay, so we're still in this range. It pushed out again impulsively and closed right back in there. Again, we're coming back out. Will it close above here? And now we got to watch for whether if we're in a trade or not. We got to watch going into COMEX in the next 6 minutes. We're not too far from the highest point of the day. Will COMEX have enough buying volume to take out that highest point of the day? Or is it lower high, and sellers in COMEX are going to push this thing right back down? Okay. I'm no longer in the trade. I'm happy I took out 80% on that drop down in there. I secured 60 pips, and then my break even got tapped out on this blue candle. Okay, so I'm no longer in a trade. Do I just want to enter now, kind of 6 minutes prior to COMEX? Probably not. So I'm going to wait it out now. Okay. And guys, just to let you guys know, we're doing 2 sessions today, okay? There's a free blogs available on our website, but also if you come over here to live sessions, you can see today, Monday, we're doing our session right now, 6 to 10. And if you want to join us later for a live Tokyo session where we'll be doing top-down analysis and just focusing on gold from 6:30 to 8:30, and at 8 p.m. Powell is set to speak as well. So you notice we've added a couple bonus sessions this week for you guys. Tomorrow, again, we've got 3 sessions. Dave is doing private New York. I'm doing post New York. And then another Tokyo session in the evening. Wednesday, again, Dave is doing New York. I'm doing post New York and another Tokyo session. Okay, so you guys got additional bonus sessions this week, guys. I got more time to be on the charts with you guys this week, so we can take advantage of it. And we thank you guys for subscribing to the channel. Okay. Okay, and we got a SST signal over here on gold, looking for buys above either 50 or 55. So long gold at 42.55 or 50. So what we're watching right over here, 42.50 is kind of this red line right here, and 55 is up here. Okay. We could also look for buys a little deeper, like here at 48, if it pulls back down into here. Okay. But we're going to get some additional volume coming in COMEX, so maybe we just got to wait out and see what's going on. Yeah, I know the Tokyo session helps a lot of you guys out in Australia. And that's why we do all these different types of sessions. We want to help everyone around the world. I know that you guys like live Londons, but I love to do them, but I got to get up at 2 a.m. Eastern. You know, sometimes I don't even sleep till midnight, so then I'm pulling all-nighters, and then it really affects my trading going into New York that day, and then kind of burnt out. I can try it for the end of the week, like on Fridays, the last day, maybe a live London going into the weekend. But to start it off early in the week, then I'll be completely burnt out. Someone said my eyes are red. Yeah, then you're really going to see that my eyes are going to be bloodshot red. And that's not from smoking weed. That's from being literally pulling 24, 36, 48-hour days without even sleeping. So I would love to do all sessions, but we do New York, post-New York, Tokyo's right now. We'll incorporate some Londons, maybe the end of the week. But the London is not like our go-to session. But London has good volume. It's great. It's a great session. I used to trade it a lot when I was younger, and it did really well in it. But I used to trade the pound dollar, the euro dollar. I used to trade. That was the time when I was trading a lot of currency. I was trading the currencies at that time. DAX is a really good security. The German index is a really good security at that time. I would avoid NASDAQ and Dow Jones at that time and maybe focus more on like a European index. Gold moves all day, 24 hours. Gold, doesn't matter what session you're trading gold in. Akira, my wife doesn't complain about my trade time. Nope, because trading pays the bills. So the wife has nothing to say about that. I told my wife prior to getting married, you know, this is what I do. You got to take it as it is. She was okay with it. So 18 years later, she can't complain. I set the rules right at the beginning. I told her, you're marrying a trader. So she understood the assignment. She knew what she was signing up for. I got a very supportive wife. She holds me down. The good days, the bad days, the ugly days, she's moral support. like we were saying on the other call, you got to have good support in your family to support what we do as traders, because you know a lot of time you're away from the family, and so you got to have good support. Okay, so yes, there is volume coming back down to like where the signal was suggesting a buy, but you also gotta also acknowledge that we're 1 minute away from COMEX market open. So you know you could initiate a buy. I'm gonna wait it out, okay? Because I want to see how first of all COMEX is gonna open. I know that it's the commodities exchange. It's been closed all weekend and now it's opening up. So there could be lots of volume coming in, bigger range. Yes, you can initiate a buy or a sell, or you can just maybe wait it out, right? The choice is yours. I'm going to choose to wait and see what happens. But if you kind of bought again right at that 42.50, you got a nice supporting wick. Let's see if it can continue to hold and close strong and continue to target at least this red line with COMEX volume. If you're in a buy, we should be at least targeting this resistance, 42.58, and possibly the daily high up here at 42.62. Because we're going to get increased volume. If there is buyers, we should at least be targeting those points. However, sellers are still here, could definitely push this thing down even further. Okay, so again, I'm just verbally telling you guys, I'm on the sidelines right now. So open bullish ignited, big push up, again, holding up this 42.50. Let's see if it can break these wicks. Okay, it's got a wick to fill, a wick to fill, a wick to fill. And this red line is where that previous 5-minute candle came right up there, and then they pushed it back down. It came back up. That's where we had that sell on that leg down, and it came right back up. So let's see, is this going to be a new higher high through here? If you're in buys, congrats. Okay, remember we said 42.50 and 55. Right over here, 42.50, 55. Okay, I'm not in yet myself, just waiting. This is the first 40 seconds of COMEX market open. Wow, okay, so big bullish candle right out of the gate. Bullish, ignited, and look at it filling all the way up there. So if you guys are in buys, congratulations. But the job is not finished. Let's see if we can take out this resistance up here, okay? If you're following the volume like I am, are we going to continue to close above this zone? Maybe catch a pullback? Or is it going to take out this? Maybe get up to that highest point of the day? Again, if you're in a buy, you also got to acknowledge if it breaks out from the highest point of the day, remember that's the top of that red point of control, 4268 up there, okay? So that's a big solid bullish candle right out of the gate. See how sometimes notice how they can fake you out? So if you were in a sell coming down, right, selling down right into COMEX, and then unfortunately something like this happens where it opens just bullish igniting, just takes off like that, preceding a very bearish bar. But you have to understand that that's how these markets open up, these exchanges, and sometimes there's nothing you can do about it. The only thing you can do is at 8:15 is ask yourself, do you want to initiate a trade and go in prior to COMEX? It's the same thing like trading Wall Street. At 9:30 Wall Street opens up. You guys know it's a lot of volume that opens up. At 9:25, you're asking yourself, do you want to take a buy or sell going into Wall Street? It's the same type of situation like that. Sometimes it's okay to just wait on the sidelines. Once you understand that concept, I can tell that you're starting to get more mature as a trader. You're starting to learn from experience. You're not trading on FOMO anymore, okay? So that was a big solid bullish candle. It's got a big wick coming back down, okay? So if you were in a buy on that candle, like from where it opened to how high it went, that's a total of 70 pips up there, but notice how it still did not break that high up there, okay? So sellers are still there pushing this thing down. Now it's going to close in 90 seconds. Where is it going to close? Is it going to close again? Look at this zone that we've been fighting this entire session up here. This point of interest right here, this 42.54 right here. So if it closes right back in this box, again, we're consolidating back in here. There was a nice big bullish candle that printed right at COMEX, but it got rejected, and let's see where it will close. And you see, look at, wow, okay, so that's a big rejection. Well, this is like an inverted hammer candle now. So remember, we still are holding our opening balance, but if these sellers take away that entire opening balance, we've lost that entire bullish candle, okay? So it's going to come down to where it closes in the next 30 seconds. Okay, so look at now the close. So we're back maybe inside here again. Maybe no volume will close above there. Maybe next bar might push down with that momentum of that wick and turn bearish. However, if it closes above here, it could be bullish one more time. But look at the size of that wick it has to fill. But with COMEX volume, it could definitely fill that wick. Okay, but it closed again inside here. So it's still bearish inside here. Could it build and break out of here? Absolutely. And then we can also wait till 8:30. That's in another 5 minutes. We can look at Forex Factory. Just to recap today, do we have any 8:30 news? Monday, December 1st, 8:30. We don't have any news coming out at 8:30. Normally, we have some US high-impact news at this time. We don't, unfortunately, have anything today. So it could just be continuing to trade according to our 30-minute and our 1-hour candles. Okay, so this candle is continuing to fill that wick. Will it fill it and create that new high up to that resistance? Or are sellers going to be right in here offering and push this volume back down? I'm not in a trade yet. Are you guys in buys or sells or right now? I'm not in anything. And like I said, if you guys are in buys, let's see if we can break this resistance right here. And we're not too far away from that daily high right there. Nice, Bark. So you took 2 buys for a trade idea on retrace. Nice. Guys, we had almost 500 viewers and we only have 200 likes on today's call. So, that's below 50%. So, I like to be above 50%. It's not a good point of control on the likes on the stream. Below the cut line. Yep. We got to be above the cut line. Likes to viewers. Did everyone watch some football on the weekend? Thanksgiving. Dallas Cowboys beat the Kansas City Chiefs. Last night, Buffalo Bills beat Pittsburgh. Beat up Aaron Rodgers. The NFL is up for grabs for anybody. Toronto Raptors had their 10-game win streak snapped in Charlotte. Yeah, Tony, Bears beat the Eagles. Bears are for real. I remember I went to that game, Dallas and Chicago, and that's the game, Tony. I said the Bears defense is for real. They're a solid team. I'd like to see Dallas and Chicago play for the NFC Championship. That would be awesome. Yeah, Bears got it. They got a good defense there. There's a saying in football, offense wins games, defense wins championships. So you need a good solid defense in football. Okay, so this bullish candle looks like it's closing above this area. So you guys remember this area, like is resistance, could be now turning into support, okay? So if we're looking to buy a pullback, if it doesn't come all the way back down into here, you know, we might have to entertain a buy here at 253, 254, 252. If it pulls back down into here, comes back down, maybe we buy there. And to take it back up to here, maybe to the daily high. But there's no pullback as of yet, okay? So what I see is a bullish ignited candle, short wicks. So this candle, if I was in a buy, I would be looking for it to build and break out of this red line. Why? Because that was where it came up, back down, came up, back down, came up right there, and then there's the breakout. Perfect, okay? So you've got that break. So this candle is doing its ignited job by breaking the previous high. So it did create that new higher high. But we also got to acknowledge that there's the highest point of the day right there. Okay? So it got rejected. Now we got to follow to see. There's still a lot of time left on this candle, 4 minutes. So it pierced through there, did some damage, that created that higher high. But as soon as it came up there, the sellers rejected it back down. So you got that ignited open. It's a strong open. Will it continue to come down and refill itself and continue to refuel and get up there? Or is it going to lose its opening balance and come down and possibly retest 50% of that bullish candle? And you notice how it's right there. At that fake out candle where that body closed and that one opened right there, that's that red line. And you can notice how it's kind of the cut line of this big bullish candle right there too. So if it pulls back to 255, you could be looking for, again, strong support right here. So buyers are in control currently of gold right now. If you're in buys, it's continuing to make that higher high. If you're waiting for a pullback buy, we could be waiting right here at this red line, maybe at this green box, or deeper down into here. It's difficult to buy up here because you're buying at this highest point here and just right by the highest point of the day. So, you know, if we buy up there, yes, we could get a few more pips to 10, but you never know. Could be a big seller that pushes it right back down. So kind of got to be careful up there. I've learned over the years not to FOMO trade. So I try to not FOMO trade on these calls. I know it sucks. You guys want to see a buy or sell, but sorry, it goes against my rules to buy high points, okay? Because sometimes when you buy the highest points, then it retraces all the way back down and you're in drawdown and it comes down to a nice location here where you could have been patiently waiting, and then now you're stuck in drawdown or you get stopped out and you take a loss where you could have just been patiently waiting to buy down in here and maybe realize minimal drawdown and then it starts to move back up. So I know it's a rule that you got to learn in trading at some point. Maybe it's got to be learned. Maybe some of you guys are being successful by buying highs and it's working for you guys, but over time, I don't know if that will continue. You can sustain that. Same way like selling lows. If I sold a low there, I'm in drawdown. If I sold a low there, I'm stuck, right? So, you know, I sold the high and then I closed it down at the low on that trade. Do I do birthdays? What do you mean, do I do birthdays? What kind of question is that? Do I celebrate birthdays? Celebrate my kids' birthdays? Yes. What parents don't celebrate their kids' birthdays? I'll celebrate my birthday with you guys. It will be February 2nd coming up, Groundhog's Day. If you guys want to celebrate that with me, I'll more than happy to celebrate it. Okay, so following this bar, where it's going to close. If it closes above that red line, that was resistance. It could be support going forward on the next bar. Look at where it closed. Oh, just below the red line, okay? So they open it bearish. It could be a bearish candle pushing down. However, it could kind of get a higher low and just continue to break out of there. So next target would be breaking this red line, which it just did, and then now attempting to get to the highest point of the day. Today's daily high wick, 4,262. But you notice how kind of they pushed it down. They closed it right below that red line. So it's still technically resistance. It came down, but again, right at 50% of that candle, picked right back up and driving, okay? The time is now 8:35, so it's getting very close to maybe attempting to break this highest point of the day. I know some of you guys were saying, I'm waiting to sell. I read you guys' comments on YouTube. I'm waiting to sell if it breaks the highest point of the day. Okay, so now you got to watch and see the liquidity right above here, right above today's daily high, up to that red zone, right up there. Okay, then maybe you got to watch and see what happens up there if you're entertaining a sell. Like for example, if it comes in there and breaks the daily high, maybe we'll come back down and do something like this. That's where maybe then you can sell it back down, right? But there is liquidity above that daily high. Now we got to watch and see, will they break it? Will they transact in there? Will they grab it? Or will it just continue to break, pull back, hold support, and continue driving, okay? So right now it looks like it's going to target today's daily high. If you're in buys, congratulations. Amir, 4255 buys are holding the Discord buy signal. Yeah. If you guys got in, congrats, okay? Right over here, guys. So what I was saying, the 4250 or 4255. Shout outs to Dave for this level over here, okay? 4250 and 55. So we can see here, 4250 was right. I had the cut line at 4250 right there. Right there, and 55 is there now, okay? So if I'm not in, I gotta wait for it to come back down and retest, maybe 55, maybe retest this green zone, or even come back down to 50 to look for a possible buy back in, okay? What I can do is set an alert there, add an alert, I can wait for it, I can set an alert right there as well, this red line, add an alert, because if I'm charting NASDAQ or US30, if gold comes back down there, at least now I have an alert and alert. And then I can wait for the price to naturally come down. At least if it comes down, I know I'm buying at a deeper discounted area, but maybe retesting previous supporting levels. And guys, just remember, today is December 1st, start of a new month, okay? This month might be a shorter trading month for most of us because kind of like the last week of December is kind of a wonky week. There's a lot of US bank holidays that are open and closed. You'll see a week, like Monday, Tuesday might be closed, a Wednesday will be open, a Thursday is open, then a Friday is closed. So you kind of already today kind of plan how you're going to trade for the month of December going into the new year. Some traders take a break. Institutions take kind of a break. You're going to see less volume trading last week of December. So you got to have a plan right now. So think about what you're doing. And then what I would do is a yearly review this entire year. Go back from the start of this year to the end of this year. And have you met your objectives? Do you feel like, what would you rate yourself out of a scale of 1 to 10? 10 being like you did the best you could do, and you did, or a 9, an 8. Are you 5 out of 10? There's things that you could have done better. Did you have a difficult year and you're below 5? What things can you improve on? What do you got to move forward into the next year? Like everything. There's things that I got to improve on as well. So I'm sure that there's something that you got to improve on in trading. If you say that you're a perfect trader, and you say 10 out of 10, then your results should speak for themselves, and you basically made no mistakes this entire year. So be critical with yourself and be tough with yourself and give yourself a rating. And what things can you work on? What can you improve on? What things can you, what things are working for you and that you can take to the next level? All of these things. It's a good time to review, okay? End of the year, holidays. Okay, it's still building. It's building up there. So right now, we're going to test the daily high. And I'm just saying personally, if I was in a buy, I would be targeting the daily high to take some profit off the table. If I was in the buy, I would be taking my stop loss wherever it is, possibly to break even or trailing it behind. Because sometimes when it breaks daily highs, it could reverse. I'm not saying it will do it right now, but I'm saying what I would be doing if I was in this trade. I would be at least securing some profit at the daily high. You can do whatever you want. I'm just saying what I would have been doing if I was in this. And you see when all of this took off, review time, 8 a.m. Remember that sell? We sold right into 8 a.m. and then 8 a.m. pulled back right there. Comex was the pullback. So for review, 8 a.m. the new hourly candle. Look at the pullback, 8:15. Comex right at 50% there. Started the next move. And since then, we haven't looked back. So it's still very bullish. This entire hour at 8 a.m., we're at 8:40. So we still have 20 more minutes to go on this hourly close. And we've already taken out the daily high right now. So congrats, guys. If you took the buy, you've taken out the daily high now. You should be in the money. If you bought at 50, we're trading at 63. That's 130 pips. If you bought in at 55, you are up 70, 80 pips right now. So definitely should be doing something, guys. With these trade ideas, the sell we had, you could be well on your way to your daily goal. Captain Boom, 2 trades, the sell and the Discord buy 0.5% on a Monday. That'll do you. Quick dog walk. He's standing here giving you the sad face. Yep, take him out right now. We don't want sad dogs around here. Lee, you take at least a week off. Nice. It's good to clear your head. It's the holidays. We want to enjoy those. Chuck, why does yours show 4298, but you're probably on the futures chart. I'm on Forex. So if you're on the futures like GC, you're in the futures contract. So you're in the future, okay? So you're a little ahead, right? This is trading Forex. But I'm sure that the candlesticks are the same. The price could be different, okay? Like if you notice my chart is XAU, USD, it's Forex. You're probably trading GC. You're trading a futures contract. Yeah, you're on Top Step X. Okay, so you're trading futures. Futures is different from Forex. But you'll probably see the same similar move on the 5-minute candles, right? Just different price. Okay, so now closing price. We've taken out the daily high. Okay, so we're up here now, but it got rejected. Now, will it close above that purple line? Will we use that purple line as support going forward to continue to go higher? Will it close below there? And if it closes below, will this purple line be the resistance to push a leg down for sellers? So if you're looking to sell back down, like if it sells back down, maybe you sell back down to this red line and you're up 40 pips, but you got to know your counter trading. So it could just come down there, catch a wick there, find buyers, and go right back up. If it breaks that red line, that's why I have that red line right there. Then I know if I go in to sell, I'm up 70 pips, and that's a buy area. We've got a signal to maybe buy that pullback at 455. So I got to know that there could be buyers. Then ultimately, there's the green box. If you're selling that leg down, then you got to acknowledge that buyers could be stepping in, like anywhere around here. So you could be selling it back down to them, realize your profit, and get out because it could come back up with that next leg up. Because there could be patient buyers that haven't bought this leg up and they're still patiently waiting right here, right here, right here, even down in here. There could be pending orders all waiting down in here. Like maybe they haven't got in, like myself, I haven't got in on this, but I could be patiently waiting to buy here or here. But I could maybe possibly sell that leg down, get out, realize some profit, pip and dip, and then buy with the next move coming back up. Okay, so technically we did not close above that purple line. Okay, so it got rejected, but now it could come back in. So we got to wait for a bar to close. It's 8:45 now, so a new 15-minute bar is also opening up. So 15-minute candle, last 15 was very strong. 8:30 pushing up. You could figure out where 50% is on that 15-minute candle. If it pulls back into there, it would be around 42.60. Could look to continue to buy and push it up. But now, if you're a 15-minute trader, you've got an impulse of a daily high and another impulse. You might have to wait for a 15-minute candle to physically close to give you that confirmation that you got bullish volume closing above. Because now it could push down. See now how it got rejected and rejected. So this could be a quick leg coming back down. Like right now, testing 50% right in there. Shooting star, if it gets a wick going back up, it might come back down with that additional volume. So I might sell this leg down, basically sell it down, broke the highest point of the day. If it can come down, I'm going to take the sell now to push it down to see if I can get it down to that red line, maybe down to that 9 EMA. Okay, so I'm going to sell. My stop loss can be just right above that previous candle or above the daily high now, right up there. And I'm looking to sell it back down to where buyers are waiting. Maybe down in here, that would be about 30 pips in profit. Coming down there, it could be about 40. Okay, so I'm in a sell. I know I'm countering, but I just want to maybe push it down, grab 20, 30 pips, and get out of the market because I know it could be coming right down to buyers. So this one I'm going to manage a little bit different. Okay, right there, break even. Okay. So I'm at a break even. I have no risk now in this trade. There it's coming down to approximately 25 pips. I want to see if it can get down there, 27, maybe 30 pips. So I'm at break even on this trade. I'm countering. I want to control my risk on a counter trade. If it can continue to come down with that 15-minute volume, then maybe I can retest this point right here. I might be getting greedy for a few pips, but I kind of want to tap into that red line. So worst case scenario is I'm at a break even. Okay? You understand? That's a quick counter scalp by realizing zero drawdown and bringing my stop loss to break even. Yes, I might get clocked out, and then I got to go back and say, Ron, you greedy bastard, for 2.5 pips, why did you not close out at 27.5 pips? And that's going to be my own stupidity unless the sellers can continue offering and pushing this thing down with 2 more minutes to go. But as long as I have no risk in the trade, I have no emotions, I can't win, I can't lose. But I could definitely win if it comes back down to the red line and more. Okay? So you got to understand my mindset. I'm counter trading. Right down to that red line. Boom. Just nailed it. So I'm taking out 80% right there. Just took out 80%. Okay, so you guys know I have 20% remaining still at the break even. I clocked out 80% at 30 pips. Right there. So 60 on the previous trade, 30 there. That's 90 pips secured at 80%. 10 more pips and I've hit 100 pips for the day. And that was a counter just on that bar. Because I know that the next bar could come right back up. Remember, buyers are looking to buy a pullback. So let's see what happens. That's quick scalping. Understanding that you could wait. Someone was saying that they were waiting for it to take out the highest point of the day. I see it took out 2. It was a shooting star candle. It came back up, and then I went on that second refuel on that push down. See where I placed my stop loss? Above there, I could have got away with that wick and still been live. But as soon as it came down, 27.5 pips, I took my stop loss break even. When it came and tapped into that red line for the 30 pips, I secured 80, and you see now how it's coming up. So all I have remaining again is that 20% at break even. If that gets tapped out, I'm okay, because I realized 80% back down in there. And you got to know that you're counter trading this bullish move. That's why I was very tight with my stop loss on that trade, because I know I'm just selling one candle down. It's like a counter trade. When you counter trade, you gotta have counter trading rules. You gotta understand there's rules to this game. You gotta know there's rules when you're buying a trend. There's gotta be rules when you're counter trading the trend. Okay? If we're still in this, now we gotta follow the volume. Now it's pushing back down with sellers. So if it closes below this red line could momentarily turn into resistance. We could get a quick retest and continue dropping down. Then my 20 pips or my 20% that I still have can continue to push down. But here's the close. There's the close. So I'm still in this. I'm still live. I can cut that bearish bar right there. You see? I got a bearish ignited candle. Continue to fill the wick. Dropping down to that 9 EMA. If it can come all the way, that's where I'm going to close my remaining 20%. If it can get all the way down here to 255, okay? Because that's this area that was resistance, that fake out when we sold that leg, resistance, now we close with volume above. So it could come all the way back down there to 255, and that's where big buyers could be stepping in. So me as a seller, if I'm still in this, even if it's still 20%, I'm going to close my entire trade down there. Why? Because it's learning discipline, how to get out of a trade if I was in my entire trade. It's right there, because I got to realize that there could be buyers right there. Okay, I'm closing out. Okay, I'm closing it out. That's a good push down. I'm closing the remaining 20% out right there, and I want out because I know that there could be buyers returning it right there. Okay, so I'm out of this entire trade right there. I could have gotten more, but I didn't. Okay, so I'm out right there. And you see now the bigger push at that high right there again. So guys, just waiting patiently. I waited for those buyers to take it up, take out the liquidity of daily high, and I sold right down. Did I get that entire move? No, that's a 90 pip move. Maybe 100 down into there. If you guys are still in, congrats, but Ron cleared out his profit. Oshi pip, kuye bre. Bravo bre. Guys, W in the chat if you guys like this. You learned. Hopefully you learned. Amir, back to back, bro. Habibi. Good job. Okay. And if you guys did good, drop a W in the chat. Subscribe to the channel. Hit the likes. Okay. We've hit 100 live trading pips. Signals in the signal group. Quite a few in there. Over hundreds on the buys. So yeah, just on gold alone. Okay, so we're doing pretty good. Jack, do I teach as well? Yes, we do teaching. Yes, we're literally teaching live right now. But if you need one-on-ones, if that's what you're referring to, yes, we do that as well. We can help you out more privately if that's what you need. Otherwise, you're learning live here with us. In a live environment, live trading, managing risk, accepting some profit, taking out, and I'm out of this trade, guys, okay? So you see how a little bit of patience goes a long way in trading. Remember, you don't always just want to buy the highs. If you're not in, you can still be on the sidelines and observe. So we see that they took out the liquidity twice, right there at the highest point of the day, and we had a reversal. And it's coming down on this 15-minute candle, right? So if you got a few pips, congrats, guys. I'm just going to remove this because I'm out of it right now, but I'll continue to follow it with you guys. Like I don't know. I don't know. Maybe some of you guys will believe me. Maybe some of you guys don't. But I don't lie. Okay. I got nothing to hide or whatever. I'm an open book. I'm very transparent. I've hit my daily goal for today, and it's not even 9 a.m. And we haven't even got to Wall Street market open, and we still have NASDAQ and US30. I'm telling you guys the honest truth. If I was not with you guys, I would be closing the computer and walking away right now. I've done my daily goal. There's nothing else left to be trading for. So now I gotta, in my calculations right now, is if I'm going to continue to trade in Wall Street, how much of my daily goal am I going to risk going into Wall Street? All of it? Probably not. So this is where I reduce my sizing if I'm going to take another trade, because I don't want to go through that cycle where I risk everything, I take a loss, and I wipe out everything. We started this call at 6 a.m. It's already been 3 hours. So not only do you give back everything you earned, but you also lose 3 hours of hard work, right? Trading is hard work. It's not easy. So you got to factor that in. If you want to continue to do this every day, weeks, months, years down the road, you got to have some kind of plan. If you don't, then every day is like a casino in the markets for you. Every day you're just guessing. Did we close below that green zone? Yes. Even if I'm in a trade or not in a trade, I still go through the motions. So now we're back below that zone. So sellers could still continue to control. It's a bearish ignited candle that could continue push down and test 250 and come back down into here. Okay. So that's how gold is moving right now. It's at 855, and we're going to move over to over here to you see, like US30 is horrible right now. This would even tell me, Ron, walk away. Like, don't even come and trade, Miss Jones. Like, look how nasty it is right now. We can clearly see how nasty it is. Same with NASDAQ. Yes, things might open up during Wall Street, but, you know, when you hit your daily goal, guys, just be done from the markets. That's why it's so good to have some hobbies. I can't stress the importance of having hobbies, okay? Especially if you live in warm weather climate. If you got nice warm weather, go out for a walk. Go fishing. Go walk the dog. Go to the coffee shop. Do something. You know, like, this is where it's important. If you have a day job other than trading, okay, this might be the time you do your normal 9-to-5 job now. You've got in the markets. You made some supplemental income. Now it's time to go back to your regular routine. You either go to the gym. Mohammed, there you go. I love at this time going. I have a gym in my garage. I got a sauna, a gym in there. I just put a nice heater in there. Oh, I love it now. Guys, I might be streaming in my garage very, very soon because I put a nice heater in there and it's like a bedroom. It's it's warm in there. So I might be streaming in there as well in my garage. Full gym, can smoke in there, no problems. And you'll see. Maybe I can work out with you guys. Take some trades and work out with you guys. Nice, Mohammed. Your gym is 100 meters from your house. That's perfect. Yep. I used to go to the local gym and I started to hate it because a 45-minute workout turns to be like 2 hours because you see your friends, you see everyone, then you got to wait for equipment. Everyone's talking to you, and a 45-minute workout turns to be into 2-3 hours. So I hated that. So I'm like, I love it now. I have my own home gym. Do what I need to do every day. Okay, do you guys mind if I go off of gold now? We're gonna, if you want to continue to trade this, again, just looking at what we've seen, you know, it's still in this range right here. We did take out the daily high with that COMEX volume, but now it's kind of coming back down. If it comes back down to this green box, 42.45 area, looks like a good buying opportunity. We know that 42.37, that's the opening balance, and they could protect it right there at 42.41. We're still inside this big red sell zone, point of control, but there is buyers trying to push this thing back up. If you're still watching gold, if you got blue volume closing above this red box, again, flip it green, because you could be buying off of it. That 255 area, 250 could continue to be buying opportunities at buying these pullbacks. But you got to also acknowledge that you do have some selling volume now into the markets. Okay. So I'm going to move over now to look at some. We've already done our top down on US30 and it's doing nothing right now. It's very, very busy. It's very choppy. I would let this thing kind of marinate and let Wall Street come soon. Let's just do some analysis on NASDAQ. Okay. Again, this is how it looks on the 5 minutes. We're going into 9 a.m. I'm going to start off on the daily. Okay. So this is NASDAQ. On the daily, you guys know that all-time highs are up here. We hit at the end of October, early November, where all-time high times right over here, orange line for all-time high, 26,285 for NASDAQ. Do we have a zone below the all-time high? I would bring it right down to there. See how I got it right down to those bodies? I got everything captured in there and stretch it into the future. Have we came up to the all-time high again? No. Okay, so there's lower highs right there, and we have a lower high from Friday's strong close, and today it's coming down. Okay, so first thing is, let's bring it down. Do we have a big bearish body right over here? You know, like this Tetris piece, bearish, inside bar bullish, bearish ignited, there's the break. As soon as I see this big candle, is gold dropping? Yep, gold is breaking down, guys, okay? So that's why, also I tell you guys every day, I hope you guys are sometimes listening, because I know that what goes in one ear goes out your other ear and no one is listening to what I'm saying, because everyone is just spamming, do we buy, do we sell? If you were in a buy, that's why, remember I said, you can rewind the video and say, if I was in a buy and we broke that daily high, I would be doing something. Remember, you can rewind it, okay? I know what I say on these calls, so I know I'm not bullshitting you, because I say it every single day. I said on this call, I was not in a buy, but if I was, when it broke that purple line, I would either be taking my stop loss to break even, or I would be scaling out at least 80% up there. If you don't believe me, rewind the tape back, okay? Because look at what happens. And if you were in that big buy from that candle at 8 a.m., it has reversed its entire hourly move from 8 a.m. right there. We're not even at, like now, it reversed at 8:45. So just in 5, 10, 15 minutes, 15-minute volume, if you look at the 15-minute candle, it's a big elevator coming all the way right back down. So you see, just in 15 minutes, it's retraced an entire hour's move. Okay, and if you got greedy and you didn't do anything up there, then now you got to go back and you got to realize, why were you being greedy at the daily high, right? It's a learning experience for everyone. Remember when I said sometimes the market punishes me when I'm getting greedy and I say, Ron, you're a greedy bastard? That's when I'm telling the buyers here, not to disrespect you guys, but you have to learn how to do something at the highest point of the day, especially as a scalper or an intraday trader. And if you don't, then this is what could happen. And you literally, like there was buyers that bought this candle and were holding all the way up there. That is almost a 180 pip move that has been retraced, and possibly now you pissed away all profit, now you're in drawdown. And something simple like that can ruin your entire day as a trader. You might now start psychologically revenge trading. You might start getting now upset, impulse trading now, trying to make back what you lost. You might take another further trade, and now you've started your week Monday, where it could have been a great day to start the week, and now you've kind of imploded. And this happens. This happens to all traders at all levels. Doesn't matter if you've been trading for 5 months, 5 years, or 50 years. It happens to everybody. Okay, that's why you got to trade very disciplined to a plan. I'm telling you guys, if you don't adhere to these rules, shit like this is going to happen. Now you have to go through this yourself. And every trader doesn't know how to handle a situation like this. I didn't know for the life of me for the first 3 to 5 years when I started trading how to handle a situation like this. I kept digging myself in a bigger hole. So I've learned, guys. Why do you think I'm very disciplined? Even on that sell, when it came right down there, I told you guys I'm closing my entire trade because it came into that green zone where it could have popped back up, but it did continue push down. Am I mad? No. I'm happy. I secured profit. I'm good. I knew it was a counter trade. Did I expect it to break this far down? No, I didn't. So shit like this happens, but you gotta be able to, lock in some profits. That's why we trade, okay? And now you can see it took out, This zone came down here, coming back up. Maybe we'll close inside here. Maybe have another bullish leg coming back up. But you have to respect that. This is now sellers in the market. Okay, guys? Sorry, I don't want to talk about gold all day because we got to work on NASDAQ over here back on the daily. But that's good, guys. Good psychology to understand when you're trading in these markets, okay? So this big bearish candle, it's bearish and it closed below that point of control right there. So it's a very important candle on NASDAQ. It was an opening bearish bar, closed right there. Can I figure out a point of interest? 50%? Yes, right there. 25,740, 737. White line. Then I can see a wick, a wick, a wick. Okay. Can I find a point of control of that big bearish candle relative to the all-time high, this big red zone up here? It looks like they've attached a lower high zone. It came in, back down. Came in, back down. Okay. If I stretch this into the future, look at where we're trading right now. If we ever do come back inside here, it might be, again, selling zone. Then I know that they're protecting the all-time high. Okay. So now that we've officially pivoted and found a bottom now, we can literally draw a line right there because the daily candles have stopped right there. There's no more selling pressure below 24,000. Now you can see it's had this big, strong move coming right back up. So there is a little supporting level. And see that wick? If I look backwards, right there, that wick is equal to that yellow line to those bodies. So this zone in the past was red right there. See that body that closed above? Turn it green. And then if you waited patiently on the daily, right there, that daily candle, you have to wait 1, 2, but your third day, look, it came down and it retested. If you had a pending buy or you bought that next day's candle, you saw the return, you're in the money. You could have made your swing trade weekly goal right there. Those 3 big daily candles, I guarantee you, are enough for you to hit a weekly goal. Just this big bullish candle alone is 300 pips. You extend it, there's 400. You extend it up there, you're getting 550, 600, and that's just buying from that support. If you bought that wick, you're close to 1,000 pips. That could be your weekly goal. If you extend that into the future, again, if you had an alert, you see it took multiple months to come back in there, but when it came back in last Friday, what was the return out of there? You're in the money. Will it ever come back down into here? I don't know. But if it ever does, I'm waiting. Where? Yellow line, add an alert. I've created it. Whether it takes 1 week, 1 month, 1 year to come down in there, when it comes down, I'll be alerted. Maybe we'll do the same thing. Maybe we'll do something like this, a double bottom, second leg is more powerful one. I could buy the second leg. If it breaks below there, closes below, that green box flip red, I could be selling down at that point, okay? So you've got to have areas targeted, right? Now, I can see we push right back up. Look at all of this kind of mix where it came up, back down, came up. So right here is like a localized point of interest on the daily, right here, this 24,900 level. Are we above it? Yes, we are. Okay, see this big bullish candle? That was a candle that kind of closed right in there, 50%. So I can still continue to dissect this big bearish bar right there. Where's 50% of it? Halfway point was right there. Then I can see that big bullish candle traded right into it, back down. That big bullish candle came into it, back down. We traded right into it, right there, closed. Inside bar, that Thursday, American Thanksgiving. Friday, they pushed out. It could be a Friday fake out. And look at Monday. Monday, this is kind of like that 5-minute setup we just had on gold. But unfortunately, this candle is going to take another 8 hours to close. But this could be a fake out, and tomorrow we could continue selling down. So just like that same gold setup we just had, right here, right there. See where that fake out was? That bearish candle that closed below, and then the next candle, you can consider it the next day, right there. That's what I'm saying could be NASDAQ coming down tomorrow. So all candlesticks have the same characteristics. You guys understand what I'm saying? Where the big bullish candle on Friday, on that low volume day, banks were closed early, could be a fake out, trapping those buyers. And look at Monday coming down, could engulf. And then we could see maybe coming down tomorrow could be a selling day down to there, maybe even further down into there. 50% of this bullish candle, or point of interest right there, where as it opened ignited, right there, right? I could have all of my levels, okay? So maybe NASDAQ is going to be a clue today on the daily of what's to come, okay? Now, let's follow. Okay, so Friday we closed up here. You remember there was the U.S. banks closed, Thanksgiving. Friday opened ignited. Short day, pumped it up right near the high. Today we opened, okay, look, they opened it and they took out the high, okay, so we created a new higher high today, purple line high. It's got rejected. Look at the number. Holy shit. 25,499 and 14 cents, okay? Like, it's as psychological as you can get. We are at an auction, and it doesn't get any more psychological than that. I don't know how else to explain it. If you guys don't understand these psychological numbers, you got to learn auction. Okay, it came up right into there, lower high. Still, sellers are pushing it down. We have a big bearish engulfing candle that came all the way down. Look at our lowest point of NASDAQ today, right down there. So it's just a hair above 50% of this bullish candle, maybe trading into that bullish point of control of that candle. Can we identify it? Yes, we can. This was Wednesday of last week, open close, 50%, yellow line. Can I draw a bullish point of control of that candle? Yes, it's right there. So you see our lowest point of the day traded right into it, okay? And there is some buyers returning it right back up. But it could just be like a 5-minute candle. You know where it comes up? And then this big pressure is still pushing down to that lowest point and probably going to break, okay? So right now, we still have a very bearish daily candle, okay? And one other point of interest is, see where we had a body close and Friday's bullish ignited open? So I have to acknowledge that, okay? Because that could be the next area we're testing, 25,250. I know it's only about 15, 20 pips away, but we got to continue to watch that level, okay? And then if you want to cut this volume in half from this yellow line to that, you certainly can. Right there, I would place a cut line because each one of these yellow lines, if we come up bullish, has to test this. If it comes up here, we'll test this. If this isn't resistance, this one will be resistance. If that's not, then the opening balance will be. So right in there. But we still have a very bearish daily candle coming down. Okay, so let's go to our 4-hour real quick. Okay, so there was Friday, 10 a.m. There was the close of the day. And then here was where we opened bearish. So they faked out the opening day Sunday night right up there. Came back down. And right here was 10. Here's Europe. Okay, 2 a.m. to 6 a.m. You know, see that cut line I did is representing the cut line of that 4-hour candle. And we opened very bearish this 6 a.m. Candle. It's closing 4 hours and 48 minutes right at 10. And then we have high impact news coming in at 10. So right now they're returning it, but we still have this bearish head that could continue to push down. So if I see bullish volume closing above 25,280, then we could get another bullish leg coming trading up to 355, maybe possibly 442, then testing the high of the day. However, this could just be like another bearish flag that wants to continue to push lower. And we do have that high impact news coming up right after Wall Street market open. So if we go into the hourly, now you can visually see 6 p.m. notched in the high of the day, came back down. 7 p.m. big elevator coming down. We continue. There's a futures market, the spin top candle, 8 p.m. There's 9, 10, 11, midnight my time. We created the lowest point of the day. 1 a.m., 2 a.m. There's London, 3 a.m., 4 a.m. You see we could not break above there. Bullish, bearish, bullish, bearish. They dropped it right there, 7 a.m. And now we're coming right back up with 8 a.m. and 9 a.m. So if you look at the hourly, it's kind of creating a little bit of a double bottom. One leg down, there's the bottom. Here's our neckline right here. And then that second leg, now we're building back up. So you can see if you're an hourly trader, I just see an impulse wick, impulse wick, impulse wick. I need to see an hourly candle blue break above those wicks, maybe positively close, and then look to retest 283 or retest 250 to maybe buy, and then to take it back up to here or possibly up to here. But sellers could step back in and push this thing right back down. So hourly is starting to create 2 times support at this lowest point of the day, okay? But we're still bearish coming down from here, okay? If you kind of want to cut this hourly candle in half, you can, but I know that my yellow line is relative right where it's a halfway point. But if I want an hourly point of control, see how exactly my yellow line is the cut, but then when I want an hourly point of control right there, so I know that's a red zone. If I'm buying today NASDAQ, I have to be aware. If I go up blue, 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 and it trades right in there, you have to acknowledge that you're trading in the point of control of 7 p.m., that big bearish candle that came down. So those sellers could be there again to sell it back down. And if you're in a buy, you could be buying into that point of control, and that's where you at least have to do something. By taking your stop loss to break even is doing something. By scaling out a little bit of profit, that's doing something, because that's what we have above us, okay? Now going into the 5 minutes on NASDAQ, you can now go back and see the opening. 6 p.m. came up, back down. See where it closed below, retested the CL line, dropping, came back up. Lowest point of the day was right there at 12:30, and then it came back up. We're inside here where we came all the way down, but now it's coming back up, okay? So what we can do with NASDAQ is add our daily bar indicator to let us know there was our opening balance. It was initially for the first like 10-15 minutes bullish, then it got faked out, then it came all the way down, and now we're coming right back up into this area right here, okay? We can add an EMA 9. We are currently above EMA 9. EMA 200, we're trading right at it, okay? And we're about 15 minutes away from Wall Street market open. So we'll leave NASDAQ side by side right here. On the right side is NASDAQ, and on the left side is Dow Jones. That is just very, very choppy in this hourly consolidated area, okay? So it is accumulating. Both buyers and sellers are accumulating this to redistribute it during Wall Street market open, okay? And also, guys, don't forget, okay, we're wrapping up our call just after 10 a.m., but there is one high impact US folder, our ISM manufacturing, coming out at 10 a.m. So don't forget this high impact folder coming out in about 45 minutes, okay? So just going back to gold now. So gold broke down, 50%, okay, of this entire red zone broke down, came and closed, and it could come back up and trade inside here. If you're looking to buy, you could be looking to buy, but you're trading right back into this consolidated zone and below that red box up there. Sorry. Okay, did you guys understand the US30 analysis? See how I have all lines and zones ready? I also did NASDAQ. I got lines and zones ready with alerts. Same what I did with gold, lines and alerts, and just wait patiently until the volume comes to an area, to a zone, and trade with proper risk management and go with the current trend of the market, okay? If you need time to realize what's going on by being on the sidelines, that's okay. You saw I waited too. I waited. I didn't get in this buy. I got in on that sell. I closed out because I knew I was counter trading, and then I didn't buy that buy, but then I sold this leg down when we broke the highest point of the day and realized some profit, and now I'm back on the sidelines, okay? But we'll watch now what's going on over here. Oops, not BTC. I hit the wrong button there. Wow, US30 is looking nasty, okay? Normally I'm complimenting US30 and saying how great it is, but Ms. Jones has her panties all tied up over here on a Monday morning. Like, this is not good trading volume, okay? It's just going up, down, up, down, up, down, up, down, up, down. And this entire neutral zone is an hourly consolidation, okay? You and I are, hopefully we're smart. We understand that it's accumulating and it could break above here during Wall Street, or sellers could break it down and attempt that lowest point of the day, okay? It's not just going to trade inside here all day. Eventually this volume that's been accumulating for all of these hours now is eventually going to redistribute, okay? Hopefully we're on the right side of the redistribution. The question is, are they going to push it down or up 10 minutes prior to Wall Street market opening? Are they going to redistribute prior to the Wall Street market opening and do the move, and then Wall Street will open and reverse the move? It could get tricky, okay? So you got to understand exactly what you're looking for and just control your risk, okay? If I look at some pre-market securities right now, MicroStrategy is down 5% due to Bitcoin being down. Oracle is down negative 1.2. What else? Alibaba is up 2% in the Chinese markets. AMD is down 2%. Micron is down 2%. I'm rounding these numbers, okay? So Nvidia is down 1%. Meta Platforms is down negative 1.25%. Microsoft is down 0.5%. Google is down negative 0.7%. Tesla down 1.3%. Apple is down negative 0.3%. SoFi negative 3%. Palantir is down. So basically we have a lot of red in the pre-market, okay? So, and a lot of those securities that I read are tech securities. So those affect NASDAQ respectively, okay? So will that continued selling pressure go into when the markets open up? Will it sell off briefly and then come right back up? So that's what we got to watch for. So right now we have a big bearish candle on both US30 and NASDAQ, and it's not even 920 yet. So I'm watching now for clues. Are they taking out the lowest point of the day prior to Wall Street market open, and Wall Street is maybe going to reverse a move up, or at least come back up, and maybe we could sell the Wall Street move back down? All of these things to factor in. When I'm not in a trade, I'm observing. I'm a spectator. I'm like at a sports game. I'm sitting, I'm eating my popcorn, and I'm watching the game. That's what I'm doing right now. I'm not participating. I'm watching. If I like to jump in, I'm not going to go in right now with with the size that I normally trade with. I'll go in with a feeler trade, testing the market out. If I get stopped out, I'm not giving away a majority of my profit. I'm not even giving close to my daily goal away. Nothing. It's just like a trade that means nothing to me. So like that's how small it is. But it's to gain intel. It's to gain information of how the market is moving prior to the Wall Street market opening up. If you don't want to take a trade prior, then just sit back and let's see what's going on. And gold is consolidating inside this range as well. So you notice no blue candle has closed back above 48, this area 49.50. So sellers are still pushing this thing down, okay? If they close it back below here, you know, you might flip this green zone and we're still going down red. And this is a big red zone. So remember, where did I get this point of control from? It came from a higher time frame. That's why I felt good selling the highest point of the day in the big red zone, because I understand what this big red zone implicates, right? Okay, so now we got US30 making a move, targeting the lowest point of the day. Let's watch and see. See when it came down there, it came down, back up, came down, double bottom, came back up. Now we're retracing back down. So there's a lot of liquidity. There's probably a lot of buyers that want to buy the lowest point of the day. So let's watch. Now what I got to do is go back to the left of my chart, and you see this purple line? This is representing today's daily low, but there was a break right there on Thursday, 5 a.m. There was another break there, Thursday, 6:30. There was another break there, COMEX, 8:20. Another break right there, 11:05, and another break there at noon. So if I just draw kind of a red line right there, 47,396, just below that 400 level, if it comes down there, I know that that's Thursday's low. And if they take that out, then we got to continue to look backwards. See where it was trading? See, that's where it was a double top. It came up, back down, came up. Right there where it tried to break, it failed, and it went and closed above. So if it continues to drop down, there's my daily, but right inside, you see there's a wick, a wick, a wick, and a wick, and a wick. So this area, there's a zone in here. Do you guys see it? Right in here, there's a zone. It right there was, I can make it green. See what I'm doing, guys? So I'm going back. This was last Wednesday, right after Wall Street market open, 10 a.m. There it was, came in, back down, came in, back down. Body closed above. I would have flipped it green in that situation, and there was the buy. So this zone now, stretch it into the future. Watch what I'm doing. Going into the future. I know that today's daily low is there. That red line could save it. This is the final zone that will save it from hitting this daily point of interest. So I continue going all the way into the future. So you see now I'm situating myself ready to trade Wall Street or today. There's the volume coming down. There's my daily purple line low. There's that red line I showed you from back in Thursday, that low. If that red line can't hold, There's my big green zone. I could also mark 50% of that zone, like cut it in half right there. And if that can't hold, solid buying opportunity, daily position right there, point of interest. That's the best area to buy today. 47,390. Or sorry, 300, 297. But if I get a buy there, it might be a higher low there. Might be a higher low there. Okay, so now we gotta just sit back and watch. We're now 6 minutes away from Wall Street. Good luck to everybody. Also, don't do any mental errors. What I mean by that is we were just trading gold. Okay, for me, gold is a different security on my broker. So if I flip to US30 now, I can't use the same size lot that I was using on gold because it's completely different for indices. So this is where now I have to manually go in and change my sizing because I don't want to make a critical mistake. This is where you gotta, have a routine, guys. Especially if you're switching securities, if you're one of those traders that flip-flops from gold to US30 to NASDAQ to GBP USD, whatever you're doing, you've got to understand that with your broker, you might have different sizing for each security. So this is where I don't want to make a mental mistake. So I'm going in right now, checking my spreads for US30. I got 1.6 spread fixed right now and 0.8 for NASDAQ fixed, not moving. My spread on gold is 0.4, but I'm switching over now to US30 if I do take a trade. Okay. And gold is still pushing down, trying wick. If volume closes below, might continue pushing down. Okay, so have they taken out this lowest point of the day so far? Not yet. Here's the close of this candle. You know what I could do is cut it in half. Okay, so look at it, cut in half, 47,450 on the dot. Okay, so now it's coming right back up. Will it continue to catch a lower high wick and push back down and see what's going to happen at this lowest point of the day? A lot of you guys are looking to sweep the liquidity and create an inverted fair value gap. ICT traders, whatever you guys are, whatever traders you guys are, okay? Just look for, I know some of you guys are looking to sweep the low, come back up, maybe do this, close above there, and that's what you're buying. You're buying this 450 to take it back up to, take out that previous high right there. Am I right or am I right? Am I right or am I right? Is that what some of you guys are looking for? If you're looking to buy, right? Gold is looking like it's moving back up too. It could be a double bottom. See how it's being built in this green zone above our hourly support. So, you could be looking for buys back above 250, 249 up here to take it back up. See how it's building? Came down, back up, came down. But look at where the body of volume is concentrated, in the green zone. Yes, we have wicks down there, but came back up, came back up. So you need a closing bar above here to continue to push that leg back up. Okay, and there is some news coming in right now. All about the pharmaceutical pricing between US and UK, all over here. Okay, so if you're following pharmaceutical securities today on your watch list, it might be impacted by all of this pharmaceutical news. Okay, so you see how it opened bullish, came up. We're still below 50%, got rejected, pushing down. We're not too far away from taking out today's lowest point of the day with 2 minutes and 30 seconds to go prior to Wall Street market opening up. NASDAQ is not near the lowest point of the day. US30 is. Is anybody in a trade right now prior to Wall Street? Not on gold, on either Dow Jones or NASDAQ, on the indices. Waiting. Okay, so have rules for Wall Street as well. Some of you guys might wait 5 minutes. Some of you guys wait 15 minutes. Some of you guys might be waiting for that high impact news at 10 a.m. Regardless, whatever you're waiting for, have some rules. Okay, so did they take out the lowest point of the day? They didn't. They came down almost and didn't take it out as of yet. Okay. And don't forget, guys, okay, so this is Wall Street now opening up after US holidays. Also, we have 10 a.m. high impact manufacturing PMI US news, okay? And we've done really well on this call today. So, like, I wouldn't even be trading if it wasn't for you guys right now. I would have been long gone, right? So, we got to trade smart. Dave sent out some solid signals for all of us. Hopefully, we banked with those, and we took a couple good profitable trades on today's call where we manage our risk as well. So, are we overdoing it? Are we over trading? I hope not, okay? So, I hope that everyone is an adult here and is managing their accounts, because now we have a break. Here it is with 20 seconds go. So we broke the lowest point of the day. See that red line that I had marked up? So I know it's already taken out that low right there from Thursday at 5 a.m. Okay. So where will this volume now close? And then if it closes down here and it comes up to retest, this purple line could be resistance. But right now it came down. It's got a return wick. Closing price right here. Get ready for volatility now. Wow. See, like some shit like that, it just opened bullish and came down. There's nothing you can do. Okay, that was just printed so fast. They're like, this is crazy volatility in 10 seconds. Okay, this is not something that you want to engage in. Okay, unless you feel comfortable trading that. But all of that happened in 10 seconds. That's how crazy volatility is in Wall Street. Okay, and you got to factor in your spreads, slippage, fills, all of that. Okay. So this is the first 30 seconds, okay? So let's just figure out what happened. They took out the lowest point of the day, they took out that, and it opened, it's returned back up bullish, okay? But where will this volume close? Will it close all the way up here, here, or back down here? We gotta wait 4 more minutes. If you wanna go in and trade in this candle, go ahead. That's up to you. But some traders have rules that they're waiting for this thing to close. And unfortunately, you know, you're gonna miss out on a bar like this. But you got to understand that it's normal. Like, if you were in a buy, did you do anything up there? Probably not. And now you could be going back down into drawdown, okay? See how fast things can go up and down and this and that? So the best thing to do is just stay on the sidelines. It's very difficult for traders to understand because you get so excited when you see a big blue candle or a black candle. I know, I used to get excited myself too. But it's not worth it. Believe me, waiting patiently it's better. I know it's not good for views on YouTube and it sucks, but I'm managing my account where I hit my daily goal. So I don't want to do anything silly just for some views on YouTube. Right? I love you guys on YouTube, but you guys are not paying my bills at my house. Okay? I got to pay my bills. The views, unfortunately, don't pay bills here. The pips do. Gold. Yeah, gold is breaking down. No bullish blue volume close above there, so it's still pushing down. Look at NASDAQ. Blue, 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 blue. Look at right to that yellow daily point of interest and pushing back down. Okay. We have 2 more minutes to go, and then this is the first 5 minutes of Wall Street, okay? Give us a better indication of where things are located, what's going on. We took out the lowest point of the day, good bullish return coming out of there. We got maybe a V recovery where it came down, back up. Maybe we'll go down, maybe a second bottom, or we're just going to continue selling off today. And we have that high impact news coming in at 10 a.m. Okay. Gold, like you got multiple wicks down here at this daily point of interest, so it is pushing back up, but you know it's building where you could look for buys eventually above 40, 42, 48, 49, 50 area, okay? But also you need a blue closing bar for confirmation. Okay, good. My spread settled down for US30. Got it back down to the 1.2. Gold has really gone up on spreads, up to 1.3 to 2.22. That's rather high for me with gold. Okay, and now we're closing in 30 seconds. So if you're following NASDAQ, is it going to close back above that yellow line, that daily point of interest? Will it continue to build to trade up to this yellow line and further up to that red box, or is it going to continue to push down? Okay, notice NASDAQ has not taken out the lowest point of the day. US30 already did. Okay, I know that these are not the same indices, they're two different securities, but one took out the lowest point of the day, the other one hasn't. Okay, now here's the close. So we close pretty bullish right back up to that, that hourly zone. So when I'm looking at recognizing a pattern, I see it came down, took out the lowest point of the day, big bullish candle coming up. So the neckline might be somewhere right around here. It might have another bearish leg that wants to come down, test the purple line, maybe back down in here. However, it could just hold right here and start making its way back up, trading through this consolidated area, and then break out bullish above here. Okay. So it's got this small doji candle. Okay, still holding. I can bring this cut line now to represent 50% of that bullish candle coming out of Wall Street. Okay, the first 5-minute candle, if I'm going back, if I'm not in a trade, I'm doing something. I'm grabbing my Fibonacci tool, I'm measuring from the opening balance to the closing balance. Okay, there's my 50%. Can I draw like a little tiny green point of control just of that first 5-minute volume coming out of Wall Street? If I can, that's what I'm doing. Okay, because if it pulls back into here, I want to see if it will continue to hold this and make its way back up. Okay, same with NASDAQ. That candle officially closed above that daily yellow line. So you could do it with NASDAQ as well. It's a strong bullish candle, opening, closing balance. Where's 50% of it? Right there. It's already retested right now, this candle inside that point of interest, point of control, and still holding up. So NASDAQ could turn bullish, and then just start to trade back up here. So you see US30 did open bullish, coming back down. Is it still holding? Will it retest this, or is it holding this body of volume and continue to trade? But you notice how we're right back in this nasty area. This is with that hourly consolidation where it was just barcoding prior to Wall Street. Wall Street just dropped it kind of down, and then it kind of came right back inside here. So again, it's not in a good area to be trading. So it came right into there and they pushed it right back down. So this could signal, like the selling leg coming back down. Again, if you're waiting, unfortunately you're waiting. I know it sucks. We're going to lose subscribers because I'm not in a trade. But there's nothing wrong with waiting. I would rather those traders that aren't patient unsubscribe from the channel. It makes my life so much easier here. And I like patient traders. Because then I don't have to keep explaining myself why I'm not in a trade. If you want to trade, go in. I'm not stopping you. Whether you want to buy or sell, you are an adult. Do what you want to do. I'd like to see now with Wall Street's volume, what's going to happen inside here. There's nothing wrong with watching. Okay, maybe they'll just break it out of here and then it gets rejected back down. Maybe it will close above here then it shows me how strong today's volume in Wall Street is, and then I can buy any returns and maybe realize zero drawdown and go right into profit again. Okay, gold is breaking down. So did gold close below that green zone? Yes. Did you guys do this? Did you go red to green? Hopefully you did. And there's now big, all of this. There's your bear flag. See where it came down? Flag, flag, bear flag. No blue volume closed above there. Black volume closed below, verifying that that's a bear flag. And there's the redistribution. Continue push down, right down to that hourly white line. Again, if I was in a sell, I would be doing something at that white line. I would either take my stop loss break even or clearing out 80% and leaving a runner. That's what I would be doing if I was in that sell. I'm not in that. Watching indices right now. See, sometimes sticking with gold is better than indices at some days, you know, like gold had a nice bear flag, set up, break, close below, could have sold, you could have placed your stop loss above this zone, and you're in the money. That's a nice big candle. But if you're waiting for indices, I'm still, you know, not convinced with US30 right now. It's trading inside this shitty area. Yes, they did. Right there, dropped down 920, 925. Wall Street brought it right back up, but we're just trading right back inside here again. And I'm being a little cautious because I don't want to give back my daily profit back to the market. Waiting. Look at NASDAQ now, tapped into that. Again, I told you, watch that 25,280, that daily point of interest. Now you got a big bearish bar. Look, it closed below that point of control right there. Okay, so it did close below. Now it's coming back up. We got news right here. Bank of America flips Fed forecast back to December rate cut. Okay, so they're flipping this rate cut in December quite a bit. Okay, see that? Now it's a shooting star candle. Okay, pushing down on NASDAQ. I might look to sell NASDAQ. Okay, it already retested. Okay, I'm going to go in a sell on NASDAQ. I'm going to place my stop loss just above the body, that 5-minute body. And I'm looking to take out that low and come down, trade down to the lowest point of the day on NASDAQ. So this will possibly be my last trade of today. I got a tight stop loss, okay, because I'm preventing my losses from my earlier gains on gold. So you see, I'm not even above that wick. I'm just above this body, okay, at 25,263.65 area. Hoping that this candle can just continue to bid down and push down. Take out that and then reduce my risk and see what we can do with this NASDAQ sell. Targeting the lowest point of the day, okay, so right there is 25 pips. 30, we can start to reduce risk if you like, if you want to go 3 for 3 today. But, you know, targeting the lowest point of the day. I see that US30 already broke it. NASDAQ is a little late to the party. So if we can continue to push down with this volume, I'm going to start to reduce my tight stop down to break even and maybe clear out 30, 40, 50 pips down there. So I haven't cleared out anything yet. I haven't reduced my stop as of yet. There's still 3 more minutes to go. We've created a lower low, lower low. We've already retested the lower high in that point of control. We've flipped that candle. Now I just got to see if we can continue to bid down this volume. But it's not easy during Wall Street when you got a lot of buyers in the market. See, they returned it right back up here. So now I got to wait for the closing candle. And then we got 2.5 more minutes to go. So can these sellers continue to bid down in here, which they are doing? Let's see if we can continue to, if we get down to our wick, I've already measured it, then I know we're moving back up to 30 pips. And then maybe if they can continue to extend it, it can move 35, 40 pips. Then I can at least reduce my stop loss and get it down somewhat close to break even. Okay, good push down. We're at 25,200. Lot of support at that level, 25,200 level. Good push down by the sellers. Okay. They're there. They're still selling it. They're still offering. But there's so much pending buys. If we can break 25,200, we are going down possibly to that lowest point. There we go. Good push. Okay. Great push, guys. There we go. 35 pips. I'm going to a break even. Break even time. Okay. This is 3 for 3 break even time. That's up 40 pips. If you want to hold to the lowest point of the day, you can. Let's see. We're going to get there. It's getting there. There. Okay. I'm going to close out 80% down there. I got my 45, 50 pips down there. Closing out 80%. Okay. Right there. 45 pips. If it can get down to the lowest point of the day, it's 60 plus. I got a runner now. So 3 for 3. Okay. You guys got that? See how I reduced my risk on all 3 trades? That was the most important thing to do on a Monday. I wasn't too concerned about profit. It was concerning my stop loss. And I placed 3 tight stops that realized 0 drawdown on all 3 trades today. 2 with gold, 1 with NASDAQ. You guys understand that? Okay, so I'm still got 20% in this. I got to follow this volume in the next 40 minutes and see if we can take out this lowest point. But when it came down there, I didn't get greedy. I locked up 45 pips down there. Told you, today is Monday. It's got to be a little bit more disciplined Mondays. Okay, so we got to watch the last 30 seconds now. I will verbally let you guys know as soon as I get tapped out at break even. And if they can't take out the lowest point of the day on this bar, maybe the next one, or maybe they're preventing NASDAQ from breaking down the lowest point of the day. There's the close, okay? So it did close. We got another bearish ignited bar. We have a big wick to fill. It's not a short wick. So this one, if it flips blue, like if we get a wick and flip blue, it'll possibly take me out on my break even. I'm okay with that. If I get taken out at break even, I'm fine with that because I know I took out 80% down at the lowest wick. But if I can still stay in, which I'm still in it right now, I'll verbally let you guys know. Still in it. There is a wick there. I'm still in. They returned it back down to the opening balance. Oh, man. What a fight up here. I'm still in it. There, they got me. Okay. So you see, guys, now my 20% is out at break even, but I cleared 80% profit down at the bottom of the wick. So it didn't break the lowest point of the day. You see, I didn't get greedy. I wanted to take out the lowest point of the day, but it didn't happen. So I'm happy. Successful trade, cleared out 80% down there, you know. So now I got to continue. If I'm going to continue to trade, got to watch what's going on. It's still not trading, doing anything. Blue, bearish, bullish, still trapped in this area. If you don't want to trade this entire area, box all this shit in. It's not really doing anything. Okay, you got to like kind of either scalp individual candles or you got to wait for the market to do something. You guys understand how to control your trading, right? Trade to a plan. You guys saw. Why did I go in to sell? I saw they came up there, got rejected, closed below. I inverted that green box red. As soon as I saw that retest, when it broke there, I took the sell. I told you guys, my stop loss was tight. It was just right above that black candle. Not even above that wick, just above that body. And as soon as it started breaking down, measured 45 pips. At the bottom, I clearly stated I'm taking out 80% and leaving the rest with break even. As it came back up, that's where it tagged 20% of my break even. If I didn't do anything, you see now they're coming after my stop loss. So you can see if you don't do anything under discipline, you see how the market can come back and take away a good profitable trade of 45 pips now to stop loss, okay? And I've now exceeded my daily goal. That was exceeding my deal. Can I continue to trade like Michael Jordan? Absolutely. But I want to lock in now at least my daily goal, 100%. So if I continue trading, I'm not giving that back. Now everything on top is just gravy. Okay, so I can continue trading all day if I want, right? If you got the rhythm and you want to continue going, we use that analogy. Michael Jordan, when he's hot, Kobe Bryant, anyone. When they're hot in basketball, you don't take the ball out of their hands. You continue to feed the fire and let him continue to score until he cools off. Same with trading. If you get 3 out of 3, 5 out of 5, 10 out of 10, if you want to continue to accumulate that day, that's going to be your day. But don't get crazy and over leverage. Now look at the market is pushing, okay? So you can see, I was very disciplined today on gold and this. Got in, got my money out because a lot of times they reversed. So you guys can see, I don't hold trades forever. I'm a scalper. I'm an intraday trader. I realize profit and I put it in my pocket and I continue to watch the bigger picture, what's going on. Did you guys enjoy today's session? Did you guys learn something from today? We have a double session today, guys, where we're coming back for Tokyo later this evening. So it's back-to-back sessions today. So you see what's going on in New York. We do have high impact news coming. So I'm done trading. No more trades for me. Not with this US folder coming out in 10 minutes. No way. This ISM manufacturing is coming out. If I'm going to continue to trade, it will be after 11 a.m. I'm going to go for some breakfast, let this folder come out, let Wall Street settle down if I'm going to continue to trade, but I can probably tell you I'm done trading for the day. We did well on gold. We took NASDAQ right there. And then later tonight, guys, don't forget, we've got updated schedule this week. We're throwing in some bonus sessions. We got some Tokyos, okay? 6:30 p.m. If you guys want to join us, 6:30 p.m. Eastern, join us. We'll be just doing gold on Tokyos. And we also have Powell speaking at 8 p.m. tonight, okay? And if you guys really want to learn about a good blog right here, Importance of Charting and Trading, have a read on that blog. Our daily outlooks we already released for our members, and other blogs are all available for you guys here. There is a free, I'm not leaving yet, but I just want to remind you guys, there is a free Telegram channel pinned at the top of YouTube for you guys. Join this. Has every single live link available to all of our YouTubes, our blogs, our before and after of our trade setups, promos, giveaways. The Black Friday, Cyber Monday deal is still on. Everything at SST is 50% off. If you want to join the team, we'd love to have you. Maybe start the new year off fresh with a new team. And hopefully we can make your 2026 the best trading year. I know a lot of traders in our group who've started with us for the last few years. Good feedback from them. They are doing well. Some traders are still learning. Some traders are still struggling. That's the nature of the game. Everyone learns at different paces. I don't expect everyone to learn everything in one day or 1 week or one candle. Some people are slower at learning. I am. I'm going to admit that. It took me a long time to learn how to do this. I didn't learn this overnight myself. It took me years to learn, especially the discipline. That was the hardest thing to learn. It can't be taught. That's why, guys, I'm disciplined here on these calls. I'm telling you. I know it sucks when you see me taking out profit, closing a trade. I know you guys want to hold longer, but you can see how many times I would have been burned on today's call if I didn't take out any profit, right? So I'm sorry, but I got to do what I got to do. Like, I'm trading with you guys to make some money as well. I can't just hold trades just to look good on YouTube and try and get bigger. It doesn't work like that. I try to the best of my ability, but I see that we're in a range, especially on NASDAQ, that I tried for that lowest point of the day, but I'm happy. Look at it. I squeaked it out, taking it out there. Captain Boom, you've been really in the group, like boom, you've been the one that's shining in our group here. So you think this is year 4 for you with a lot starting to finally get the hang of it. See, so for some traders it takes 4 years to get the hang of it. So you can see it's not 4 months or 4 days, 4 years for some traders. And it takes time, I'm telling you guys. But you got to do it the right way. The responsible way is patience, discipline, risk management, understanding your technicals, understanding fundamentals, understanding that we have high impact news coming up in 8 minutes. Probably not the best idea to be trading at that time. Learn how to control emotions, whether you're in drawdown. When you're in drawdown, you should have already calculated that trade, how much you're risking. So then you shouldn't panic. You shouldn't be going crazy if you're in drawdown, okay? You gotta be able to handle your emotions when you're in drawdown just like you are in profit. Nobody should tell the difference whether you're making money or losing money. That's how you should be, like a poker face. No one can tell. So that's how you gotta be when you're trading. If you've already calculated prior to taking the trade, you know what to expect. If it's too much risk and you see it's too much, don't take the trade. you got to fix your risk. You got to either decrease your position size and open up your stop loss, give it some more room to breathe. These are things that have to be done as a trader, okay? So now let's, what is going on? US30 took out the lowest point of the day, closed back above the structure. We're getting that push back up, but now we have US news coming up. Same with NASDAQ. Kind of came down. I thought it would take out the lowest point of the day. It didn't, okay? So they protected it, still coming back up. So our indices are moving bullish right now prior to our manufacturing news coming out. And gold dipped all the way down into here, okay? So it's coming right back up. What you can do with gold, I know it's messy, my charts, clean it up, tidy it up, okay? Just get rid of a couple lines, cut lines if you have to. I had alerts at each one of these red lines. That's why it's saying to remove it. Like, you know, I could continue to wait for, you can see what it's doing. Left shoulder, inverted head. Now kind of came down, V recovery. Will it come back in here, go back down? Will it come down, higher, low, close above here, invert this, then you got buys back up to the top? Or is it just going to continue selling back down today? Okay, that's if you're on gold, and gold is going to be heavily impacted by our manufacturing news coming up in 5 minutes. So if you're in gold, pay attention to that, as well as NASDAQ and our indices. Lee, and discipline is something you have to work on all the time, forever. I agree. Sometimes I get undisciplined on these calls, but today I remained very disciplined. So I'm proud to say I'm 3 for 3, secured 80% on all 3 trades. I left 20% running if it would continue to go down further, and 2 of them came back and hit my 20%. But altogether, daily goal is done. Guys, there's a message on YouTube. First 3 people to email SST@StockSniperTrading at gmail.com get 50% off on one-on-one for 6 sessions with myself and Dave. So if you want that private one-on-one, like on a Zoom or recorded Zoom, and then we can email it to you. Any questions you have, we can help identify areas for you to help you. If you need that kind of private help, you know, maybe you're shy and don't want to do it in front of a group, then we're here for you guys, okay? But we'll have to pre-book those, like those dates, because we're also helping out some traders on a daily basis. That's what we do, guys, too. Sometimes when we're not in the markets trading with you guys, we also have a life too, but we're also helping individual traders here at SST get better and better. Okay. So, guys, do you want to stick around 5 minutes for the news, or do you guys kind of want to wrap up today's call, stretch, move around, grab a coffee? I feel like we did a good job today. We're going to be back again later tonight at 6:30, so kind of don't want to overdo it. But if you guys are going to continue to trade, just please, you know, understand, did you hit a daily goal? Maybe you walk away this afternoon, okay? Start of the week, it's Mondays, first day of the week, first day of the month. Maybe you're starting off on a great foot forward. Let's continue that momentum, okay? I'm going to take a break. I'm going to go grab a coffee, go for my morning walk, get a workout in, and I will be back at 6:30 p.m. We'll do, again, fresh charting on gold. We'll start all over again. We'll do a gold top down. We'll get ready for the futures market, and we'll get ready for Powell's announcement at 8 p.m. later tonight, okay? Don't forget, guys, in 3 minutes, you have some high-impact U.S. news. If you're going to continue trading, just be very careful, because it's going to be volatile, and it will affect all of these securities that we're watching today, okay? So I appreciate everyone. Guys, thank you guys so much on YouTube for the likes. Subscribe to the channel if you haven't already. We're almost at 89,600 on our way to 90,000. Hopefully we can hit this week. And thank you guys, everyone on Zoom. I hope you guys had a great weekend. Hope you guys had fun today to start off the week. Hopefully someone learned something today. That's what we're here for, is to help learn something new every day, okay? Profits, if they come, that's a bonus, that's icing on the cake, but we're here to kind of educate and not always just get in trades. But that's what we do here, okay? And today was a good day, in my opinion. By managing risk, by 3 for 3, in my opinion, it's a good day also with the signals that Dave sent out as well. Those were also bonus pips as well. So good job, guys, and everyone on Discord as well. Thank you to everyone in the commodities Discord. Shout outs to all of you guys. Chris, shout outs. I love these memes. I love Family Guy. Love that show. Forex Borix, thank you for everything you do with all the snipers. Appreciate all of you guys. Makesh, G, welcome, guys. Guys, I watched this movie with my kids on the weekend. It's amazing. This movie, Zootopia Part 2. If you guys get a chance, go watch it with your kids. It is unbelievable. Do you guys know how expensive movies are? Do you guys want me to just tell you real quick? For four, myself, my wife, and 2 kids, we went on Saturday night. Tickets alone for 3D were 75 Canadian dollars just for the tickets. We bought 2 popcorns, 2 drinks, a bottle of water, and my daughter the kids snack pack with a little box and her little drink. The popcorn and drinks came up to $100 Canadian. Total for a family of 4 to go watch movies was $175. Okay? I remember back in the day, movies when I was going were $2.50. $2.50 for a popcorn and drink, $5 at the most you were spending for movie and popcorn. Now it's $175. It is crazy. It's crazy. I can show you guys receipts. It's unbelievable. It's and I just had a Coke. I didn't have a beer. I didn't have a wine. I didn't have nothing there. It is crazy, but unbelievable. But it was a good movie. Short the cinemas. Yeah, AMC. We got to short them again. But guys, have a good weekend to everybody. Thanks everyone for in the Discord. Congratulations on all of your profits. You guys were already trading prior to us waking up. So good job, guys. And everyone else, have a great day. Well, not a great, enjoy your day, but I'll see you guys again at 6:30 p.m. Okay, so join us later for Tokyo session. And right now we got high impact news at 10 a.m. Just be careful trading. Okay, we'll see you guys. Thank you guys so much. Have a great day. God bless everyone. I hope everyone had a good, nice, long weekend and ready to start this month off. Okay, thanks guys. Have a great day. Appreciate all of you guys. We'll be live again at 6:30 p.m. Refer to our website. Mark, thank you. Ooh, Justin, yeah, I recovered all.
Hey guys, good morning. Welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.